Good morning, ladies and gentlemen, everybody, boys and girls. Welcome back to the channel. So currently this morning, the S&P 500 is currently over support, give or take. Let me double check. Currently, the market could be looking to retrace up to the pre-market volume weighted average price, which is the green box you see there on the screen. That's why I have it highlighted there. That's why I have this blue line here, this blue line where it says support over under. That's our 50 SMA support over under. Over under, it means if it's over, it's still support. If it's under, it means it's arguably breaking. The green box is on the upside. Those are the volume weighted average prices of the pre-market 30-minute trend, if you will. So essentially, the market... hold on one second. What was I thinking? So essentially the market, it's arguably targeting up to about there. It's not that it always works, but a lot of times it's like a nice generalization of where we might take the market each morning to a degree. So I found over the years it works relatively well, using as kind of a back testable, targetable area. And then many times could be used as resistance or support. Just depends how it's set up. So this morning, the way the market is currently set up is that this is a gap down. Obviously, this is a gap down into trend support. So that's why this morning when the market, that's why this morning when the market gapped down to here, it essentially bounced, right? It could have just kept going down, but for me and my system and the systems that I follow, that many follow, would be that this blue line is support. That's our support trend that we are trying to use to build the market. And as long as we're above it, then the market hasn't actually broken down. Now, someone might consider this in the after hours, right? Like that move down, like someone for sure considers that a breakdown, and to some degree it is a breakdown. Just kind of depends on what what you're doing. But for me, the breakdown would actually be below this blue line. So for me, this is just a pullback in the after hour session throughout the pre-market down to support. This is a bounce at support. All right, this is continuation down back to support. Now we're just bouncing support again. Now, it can break support, sure. Markets can only do whatever they want, but for the time being, it's not below support. So, therefore, it's still support? Yeah. Now, that's that. Excuse me. So, as we bounce support, one of the things we, many times will look to do is think to ourselves, if support were to hold and then it is to go up again to some degree, where are areas the market's going to go back to, right? Because if we buy something, we want to know, well, how far can it go up before I might be met with resistance that may then reverse the gains that I've made on a play, or maybe start going in the opposite direction, right? So it's all about probability, right? Can it probably bounce here? And if it probably can bounce here, where can it probably go? Right, that's the whole thought process. So if we end up bouncing support right here, which we did, right, what are some things that we could go back up to? Well, for me, something I like to follow a lot of times, as you see here in the pre-market system, is a 30-minute volume weighted average price anchored to the high of the market. So for me, that would be our kind of back testable, targetable area for support off that low, right? Now, once we get up to here, the rules are that we don't look higher for the moment. We actually look to go back down, all right? So now that we've kind of met that spot, that's kind of bad. So anyways, just kind of going in depth about kind of how that system works a little, which is pretty simple. It's just like you saw there, right? Excuse me. Got a little tickle in my throat or something. And a hair in my mouth. That's great. So yeah, that's kind of that. One second, I'm gonna do something here. Copy Discord. Also, like another thing we can do is we can go back up and back test this 50 SMA, right? So like just like that. And so you see where that 50 SMA is at and how the market goes back to it. It's not that, that's a perfect system, and it's just, again, moving averages are one of the universal calculations in the market. So, they're one of the most used, maybe indicator is a good word for it. One of the widely used indicators when it comes to programming and back testing strategies in the market, because they're constant. So a lot of computers and programs and algorithms that do end up getting put forth in use for the market, a lot of them use moving averages, right? So a lot of times you will find markets like to use moving averages in the sense of moving to them, pin dropping to them, going to them, etc., right? And in what you're seeing in real time is just computers kind of reading the markets and going, are we above SMA, right? So like in real time right now in this market, there are computers that are saying market is above the SMA, buy long. Market is above the SMA, buy long, right? And, retail traders might be going, oh, well, it topped here and well, there might be a 1 or a 5 minute fair value gap here. So then that's going to be resistance. So then the market has to do that. True, but the market's going to do whatever it wants regardless. And again, it's controlled by people and computers and things that have far more money than all of us. So really my objective each day is just to, hop in on the market and really just try to do my best to feel and position myself in a way that I feel is most with today's algorithm. That's why I think it might sound silly and stupid when I say it, but I really do feel that. Again, that computers, a lot of times drive market, and so do market participants like us, but our objective is just basically trying to figure out what the trend is and trying to stay on the right side of the trend and knowing where those structural shifts in the market take place, so that when they occur, we're not trying to buy long when the market's ready to break down. We're not trying to buy the oversold dips that just keep going down because the market's breaking down. See, that's kind of something that I do see a lot of, and I used to do it myself. We see that in the market pretty often, just, on like cascade breakdown days. A lot of people will try to buy a dip and then it keeps going lower. 9 times out of 10, those days, maybe like 7 times out of 10. 7 times out of 10, those are the days when the market's just started a fresh breakdown. And so anyways, really just that's our objective. Trying to find the trend, stay on the right side of the trend for the day, and just go about our business. Good morning, Kay Colo. Bonjour, C. Hope your weekend was good. It was a good weekend. I guess I really didn't do too much this weekend. No, just kind of stayed at home, worked, loaded a bunch of floors into my house that got delivered. Yeah, today's kind of busy. We're doing a bunch of... I may or may have to leave today. I have some contractors going to another property, but I don't think I'm going to have to meet them. I think they're just going to be using the lockbox code. So for sure, at some point, I'm probably going to be getting a phone call, having to be doing some talking on the phone here, but that's no big deal. So, right on, brothers. Yeah, so as I said before, this 686.98 to 686.74, that is, yeah, I mean, that's just kind of, along with this 50 SMA, it's almost better just to make this whole thing like this. This would be our kind of long target after bouncing that support over under, right? And so yeah, I mean, this is the way I'm currently reading a market. It would be, we will look bearish for trend change or breaking down below here. From this point, there was only long bias to here, right? And so as we lead into the open, or just weigh its position for now, is it's a game of who's willing to try to hold support amongst whomever this volume and this bearish leg down, right? So this bearish pullback down is now battling me and whomever else that are still willing to buy the dips here, okay? And from what's happened pre-market and now to right now is now we have a market that's pretty much this. It's where I'm circling. This is the playing field. Okay, that's where the playing field's at. More specifically, it's the buyers that are supporting the support over-under versus the pre-market sell. And their key volume trend is that green box, basically. So the buyers of today's pre-market lows would get a bigger payday, obviously, if the market keeps going up, all right? It's going to be hard to get the market to keep going up for the moment unless we break out the volume-weighted average price of everyone selling the market leg short today and preventing them from making a lower high, okay? It's all a game of going up and going down. People trying up, people trying down, market trying up, market trying down, right? Trends go down as they create lower lows and lower highs. Trends go up as they create higher highs and higher lows. The objective is trying your best to figure out, sometimes, not all the times, where those lower highs and higher lows are meant to be made, trying to be made, or can be made. Because then you know, to a degree, if no lower high or lower, or no lower higher or higher low, in this instance, a lower high, or if no lower high is made, then obviously markets keep probably going up, right? Well, at least to some degree. So those are a little bit of the ways I think. So that would be, again, markets moving up into our long target destination for pre-market. So this is the zone, right? And the reason I'm drawing it like this is because there's a 50 SMA here, and then the two VWAPs that I like. So basically my targets would be specifically on this bounce there for the moment. Next one would be here, and the next one would be here, all right? So when you see a zone like this, arguably there may be 3 different price points making up that entire zone that we're arguably looking to try to get the market towards and to. We don't have to go all the way to the top side of the zone. You know, we could go to the middle, we could stay on the low side, but just anywhere close into that zone would be job well done, all right? So we've now done that. Right? Now the question really is, does it go higher, right? Or do we kind of get a little bit of resistance and the market ends up kind of rolling over, right? We'll see. You know, by the way, the market has not been easy by any means over the past couple days. Been very back and forth, if you will. Do I want to do that? That's fine for the moment. Colo, yeah, so on Thinkorswim, it's a custom study you need, and they're on the internet somewhere. I have one. I'll share it to you, but I'm not going to go through the process because I don't use it, and there is no generic way. So I'm just going to send you something. How do I do this? It's been a while. Chart studies. What is it called? Probably Anchor VWeb. Let's see. Is it this one? I think it's that one. No, I think it's that one. Huh. Alright, I just copied that link into, what's it called? Whatever your thing's at, and chat there. So, you can go ahead and do that. But basically, once you put that study onto Thinkorswim, inside that study, you have to change the date and the time. So you change to whatever day you want the anchor to start on, and then at whatever time you want it to. So long story short, I don't use it, and there's a reason why. And it's because it's very, very inefficient for the way that we use VWAPs, right? I'm not trying to sit and change the date and time of, a study every single day, every minute. So I use Thinkorswim, I use TradingView for that matter. So yeah, and this is seeming to look a little goofy here. So that is. Actually, I think I have our supports wrong. I feel like my moving average are doing something weird this morning, but let me just double check. 68525. 685. Yeah, actually, my support's a little wrong. Hold on. Extended trading hours. I have things a little backwards, which I don't know how I got that wrong earlier. Maybe I was accidentally on a wrong time frame, but thought I was on the right one. I had to be because it's not right. The 1 hour is a little closer, but that's nothing too crazy. Yeah, our support's actually a little lower, towards 685.27. So we might have been, I think we might have used just something else there. It might have been the 15's close. I don't know how I did that. I must have done something wrong. Same concepts still apply. This is our back test counter level pre-market, still our resistance over under. Now, if we end up working good resistance off this today, that's going to be our downside target now. So, whatever I did earlier, I kind of got a little wrong. That being said, the logic does still apply in the sense that the VWAPs many times are always our counter long destination in the pre-market. So the market ended up supporting here for reasons that I wasn't actually currently watching correctly. But yeah, so there's your VWAP if you want to use it. The dates and time, you just have to change over the dates and times. It gets a little annoying if you ask me. Yeah, so there's that. I know a lot of our morning breakdowns are somewhat long-winded. I have to use a lot of brain power to think about, again, the most efficient way to move the market for the day so that hopefully it arguably does what we want it to do, and we're not, sitting around thinking, oh, well, that's crazy that it did that. We never really want to look at the market and be like, whoa, why did it do that? We always hopefully want to come up with some reason why it's doing what it's doing that at least we can rationalize, whether or not it's, that's really the objective. And then hopefully seeing the market do exactly as you say and then go to where you want it to go. That's always the objective. So right now the volatility index is okay. Now it's like this is always what happens, right? Like I start looking at the S&P 500 without going through every single market, and I'm always kind of like, I'm building. It's building, right? So, and I always start with the SPY first because I always want to know, is the S&P 500 positive or negative? And it's not negative today. It's still positive, right? So then I start to look at the volatility index and I start to say, well, what's the VIX doing? So now I can see exactly why the market topped here this morning. See, remember earlier, I'm like, the market did this for whatever reason it wanted to, right? I didn't know the reason at the time. And I've done a little more research, and now I have the reason, right? So the reason the market, the S&P 500, topped here is because that is the 30-minute sit algorithm level for the VIX. So, ready, watch. Look at the chart on the left. Let me zoom in. See this chart I'm zooming into? Where is the 30-minute simple moving average? Remember, you guys already know this, but we'll do a quick repeat. All right? So as the VIX breaks down the 30-minute, the market goes bearish. So yesterday the VIX breaks down. It then back tests the 30-minute, stays down. The VIX 30-minute is currently priced at $19.90. Ready? Click. Where is the bottom of the market, pre-market, for the VIX? Right about $19.90. Okay, so where is the top of the S&P 500? Right here. So what we did today is we topped the S&P 500, MES, ES, the futures market. We topped the futures market, ES, MES, S&P 500, UPRO, etc. Anything really S&P 500 related, we topped today, pre-market, by using the backtest support of the VIX 30-minute. So by using the VIX levels today, the market was able to top the market. All right. So I would simply say today's really today's pre-market top SPY is more of a VIX 30-minute support trade than it is an S&P 500 short, right? We really were just pulling the market back by bouncing the VIX there, all right? And now the bounce on the VIX, right? If you think about it now if you think about it, this is correct, ready? So earlier I thought for some reason, and maybe it was, I don't know how I got it wrong, but either way, I was moving too quick apparently. So either way, we just know that this is the 50 SMA support over under. All right. So that's the 50 SMA support over under. The green box right now is our short-term counter trend long target. Short-term counter trend long target, which is pretty much completing. All right. And so, and actually, like 1 second, let me delete this off. Again, and right here, this would be topped market here using VIX 30-minute support trade. Okay. So we'll walk through this once more. We're going to go full screen on this. So this is the VIX. This is the 30-minute. Okay. VIX 30-minute. Right? Pretty straightforward. VIX breaks down. Then back test resistance. Then down. And then throughout the after hours pre-market session, it bounces up to the trend again. Okay. Which you can't see on this chart because this is a regular trading hours chart. Move this to a pre-market chart. Oh, wait, sorry, this one here. Move this to a pre-market chart. All right. And this is the VIX breaking over, right? So the VIX this morning after hours broke over the 30-minute trend. This is the VIX pulling back to the 30-minute trend, and that's the VIX confirming the break of and the bounce away. As a result, we did what? We topped the market here using the VIX 30-minute support trade. Okay? So now that our counter trend long target for the S&P 500 or the SPY is pretty much completing, this is an area where we can look to be slightly bearish for like pullbacks, maybe some scalps down, which arguably they kind of already started a little bit. If you look, I mean, to a degree. And when I say that, it's, again, this is all very short-term stuff. But see, now the long target is complete. So something that we would now look for off the 30-minute is if the 30-minute is successful at holding resistance, whether sooner or later or just in general, and does in fact go down to some degree, some things we may look for are like 1-minute volume weighted average price back test for the moment. So now we would take the smaller market. You see how we've already hit the 1-minute volume weighted average price of the market low. So that would be, so this would be an initial 1-minute scalp pullback target off the 30-minute. So basically what just happened here now is we've done a 30-minute VWAP pullback or scalp down, all right? And all we've done is take a larger 30-minute level, use it as resistance, and pull the market down to its 1-minute volume weighted average price here. This is a 1-minute VWAP off pre-market low. All right, so the same system we use to counter the market long today here and then use as resistance here is the same thing as we're doing on the 1-minute. We're just doing it on a 1-minute. Because the 1-minute's obviously going to be far more fast. It's going to be a faster calculation than the 30, etc., right? So we've essentially done the scalp down to the 1-minute. The 1-minute support is holding, all right? See that? So this is effectively how we just move markets in between different volume weighted average prices of different market participation levels for the day. And also tracking how people have already been trading in the market, right? So we kind of know the 1-minute VWAP off the pre-market low. That's the 1-minute kind of volume support trend from everyone that bought the lows, bought here, sold here, bought here, sold here, bought here, sold here. Their key trend is right there for the moment. So until you take that trend out, you're not going to scare people out of their positions. Or I would say, like, maybe not people, because obviously there's always someone who takes stuff off early, but just in general, that volume trend isn't really going to stop out until it's below the 1-minute VWAP of the pre-market low, right? So then that's how this market kind of keeps doing this and holds up. And if it grinds up through the 30-minute, that's going to be a break point, right? If the 30-minute does not give up and it re-rolls through the 1-minute, then the 1-minute trend stops out here, and then we go lower. So there's a lot of different ways the market can form up, but I just want to kind of have fun there. So anyways, now if we go back to a 30-minute, what's it going to look like? It's just going to look like, sorry, let me just take that down real quick. If we go back to the 30-minute, it's just going to look like the market hasn't broken out yet of that top down, blah, 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 yada, yada, yada. So I'm going to do that. I'm going to change this back over, put the VWAPs back on. I have not made any new purchases in our YouTube portfolio, dollar cost averaging portfolio. Might today, maybe not, just kind of depends if we actually go into a sell move, which right now I'm not banking on a sell move because, you know, I'm just not, but we'll see. Bitcoin. So I've made some YouTube shorts about this the past couple days, but either way, you guys know Bitcoin's doing what it's doing. Well, you guys already know why Bitcoin's doing what it's doing, right? Because we taught you the 30-minute, or not the 30-minute, we taught you the daily VWAP tactic for Bitcoin. Ready? Watch. Ready? How do we, many times, not all the time, but many times being like 7, 8 times out of 10 times, accurately forecast where Bitcoin will go and where it can then have resistance at? By the same thing we did this morning pre-market with the S&P 500. So you remember with the S&P 500 today, we said, hey guys, we're going to look for the market to go back to the 30-minute volume weighted average price location, right? And that's that green box in the chart. And then miraculously the market went back there, mainly because of luck, but at least it did. We do the same thing with Bitcoin, right? So we go to Bitcoin and we're going to go to a daily chart and we're going to take a VWAP. And we're going to do the same thing we just did on the S&P 500. And we're going to take a VWAP and we're going to anchor it to the high for one, okay? And then I usually like to do 2 VWAPs. I usually pick like a high point I like, and then I pick arguably a candle that kind of starts the breakdown. And in this case, it's kind of 2. So it could either be this one or this one. Personally, on this time, I did 3 because I wasn't totally comfortable, right? So either way, so we would take the VWAPs and we would just make this the zone and go, okay, so based off of everyone that has been short this last leg or long this last leg, I'm creating or thinking the key volume trend is right there. So that will be the counter trend long target and potential new resistance start point down. If only we get above, arguably we change that structure. So now let's look back at Bitcoin and let's analyze this zone, and let's analyze the 3 exact specific price points of the zone, because it's not the zone that we're interested in. It's the exact price point of each specific VWAP we're interested in. And since we don't know for sure which one of those VWAPs the market may use to top the market, we create the zone. Then within the zone, we watch each of these specific price points. So each of those specific price points, we're just going to label 3 blue lines. And I'm going to delete the green box for the moment. Let's go into a 5-minute chart. And I'm going to delete the VWAPs because we no longer need them because we know where they were at. They were the blue lines. All right. So this is the market bouncing back and doing its counter trend long on the daily. This would be basically the first tag into the first specific daily VWAP price point. Whack. All right. Market grinds up. It's right. Well, just in general. Now it could have created a lower high, and market can do whatever it wants. Okay. Either way, market grinds up back to the first daily VWAP. It then breaks it out to the next daily VWAP. Market back test, double top, whatever, back under. And then there is your market. Okay. Don't know what this is. Maybe it was news related. Who doesn't matter, don't really care, because we would have only really shifted long bias the market if it was doing this. But we're still below. Okay. And then obviously, if you look, if the daily lower high is supposed to maybe start in here, probably like 6, 7, 8 times out of 10, whatever. Do you notice the bear flag that comes right after? when you're focused in the right areas of the market, you will just tend to see patterns form up that actually kind of work, right? So anyways, and then also there was a nice fib for this if you fibbed out the high to low of that, right? Now, let's think about the opposite here. So this whole entire drop, okay? This whole entire drop for Bitcoin, right? Well, we know how we found the counter trend target for Bitcoin and the potential resistance start for Bitcoin. But what about the opposite? Like, well, if the market goes down, well then what about the support? Like, when would this maybe stop going down? Let's use the same tactic we did for figuring out resistance, just on the opposite side. Which we already did this days and days and days ago, and we've talked about this with you many times already, but we'll just reinforce it. Ready? Go to the daily chart. I'm going to zoom in a little bit here. Sorry. Well, it kind of went back. I got to zoom in now. Sorry. I got the highlighter thing on. Come on. There you go. All right. So we would then do the opposite. So the two areas, oh, sorry, let me delete that off and delete this off. All right. So what we would have done, and the reason I'm saying what we would have is it happened over the weekend. I wasn't even on the computer at the time of it really happening, but just in general, what we would have and what we do and what you see me do pretty much every single day on stream and we talk about and we preach and we teach is really just this. Take a VWAP, anchor to the low of the daily chart. All right. So the way that I would have had this set up is I would have had it set up like this, and I would have had it set up like that. Right? This would have been my first target down when that market started to roll, and then next would have been the low of the daily, which would have been here. Okay. Let's take those off. And then lastly, the weekly, which we haven't hit, which there's a good chance we hit, which this target is down to here. So I am looking for the Bitcoin market to arguably go down to there. Or at some point, we want to see the market interact with that volume weighted average price. That's also going to maybe be a little bit of a long tradable area, whether for a bounce in the short term, whether it ends up developing into a weekly bounce or whatever. That's an area where we'll probably try to do something long bias. So whether, again, price goes to, or this VWAP goes up a little bit, then a little bit, and we hit it later, doesn't really matter. All right. Back to the daily. All right. So we have the chart set up. Let's go look at, kind of the intraday here stuff real quick. Sorry, I'm just really in my zone here this morning with Bitcoin because obviously it was a good move. So I know, probably the internet's talking about it and yada, yada, yada. So this is how we would have had this chart pretty much set up. Is this would have been, all right, after resistance and it rolls over, that's your first target down, because if the daily chart wanted to hold a higher low, this is where it would have to do it. It does not hold a higher low. For me, it goes down to the next VWAP, whatever, blah, 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 and then just gets oversold, back test goes up, whatever, right? So now what? So for Bitcoin, this is what we're doing now. Now for Bitcoin, this is how it's set up. We have daily VWAPs anchored to the high of the market up here, low, high, all right? So I have two, I'm going to anchor, really I'm doing, see this one is kind of one where this candle's so abrupt and so big down, I have to use that one. So, but since there's no daily activity afterwards, it just looks like this. So this is our counter trend long target for Bitcoin for the moment. And when I say that, it's just wherever the VWAPs are. Wherever the VWAPs are, that's always going to be target. Doesn't matter the price, it's just the VWAP. So wherever price those are at, that's target right now. So those are the targets for Bitcoin right now. So that's the counter trend long target and new potential resistance start there that I'm focused on. I really don't care about what's going on in this 15-minute chart, 5-minute chart, none of that. Because I just know that all the big moves that you really like and that do good things, they start on the dailies and the weeklies. So like That's the resistance I'm interested in, because the daily chart, there you go, wham, right? I don't want like this just little random pullback, and so that's Bitcoin. So yeah, yay. Good morning, everyone. Hope you're having a good day. All right. So obviously you guys know the market as it relates to trend is still positive. It's been choppy, it's been annoying, it's been many things, sure, but one thing is for certain, the market is still positive here this morning. Give or take, right into the 9 o'clock area, I'm going to give this, oh, yikes. I'm going to give this company a call just to kind of see where they may be or what have you. Yeah, in the meantime, I'm going to take a quick second and just kind of run through some penny stocks, see what's kind of moved. Likelihood I find anything good is very minimal, mainly because I've been talking on the market here this morning, making sure everyone's pretty aware of how the main market is set up for the day. Again, really I won't say the main objective, but something we try to, do a good job at is making sure we efficiently go over the market, so that throughout the day you guys are on the right side of the market. You understand where the algorithm level is for the market, and so on and so forth. Because all said and done, that's how the market is going to trade. It's going to follow the SMA to a degree. It's kind of interesting. Yeah, it's a back test trade. Actually, that's funny. That one actually worked out really, really good. Also, another thing that I want to mention too for right now that I'm thinking about is the bounce is continuing up for the moment. Not bad. So this is kind of one of those situations where I'm looking at the VIX and VIX broke over the 30-minute, VIX back tested the 30-minute, VIX shooting up, right? Arguably, we might see the VIX just roll back to the 30-minute. And if that ultimately happens, that's going to be the target short for the VIX, back down, basically pre-market low area, back down to that 50 SMA. And as a result, we'll basically keep taking the market up. So since there isn't a whole lot of resistance found here at these 30-minute VWAPs, that means people trading short pre-market aren't really willing to beat it down much for the time being. So we might be looking at using the VIX right now, VIX's sell target, to keep taking the market up long. But anyways, right, so remember, market is over the 50 SMA, so we're on the positive side of the market. We pulled the market back earlier this morning because the VIX broke up and then held support and bounced. VIX is no longer going up, it's pulling back. For the VIX market to remain positive, it has to stay over basically $20, $19.90, right? If the VIX wants to go into a new meaningful downtrend, it has to go below that, right? So just in general, we already know that 1990 is a very probable place that the VIX wants to go to, because the market is really just always plays a game of whether we're going to stay in uptrends or downtrends, uptrends or downtrends. So This morning, the VIX already tried to stay in an uptrend, right? Because it broke out, back tested, went long, all right? Basically, this just has to keep going, and if it doesn't, the price will go back to here. And as the VIX goes back towards 20 and 1990, people are going to bounce the market like we're doing right now, right? But the market had already started going long since Friday here, where the blue line is. The blue line right here. This is where the market and the algorithm shifted positive on Friday. Which you guys know, right? Because you watched this stream. We said that many times. We even said I was getting long and all these things and whatever, right? So the market's long bias. Why? Because the market maker trend has flipped positive, right? And when I say market maker trend, no, literally the market maker trend, right? That's literally what I think that is. And the reason I say it is because I know that there's algorithms positioned here, and it's just undeniable, right? So market broke up, chop, whatever, flips positive, stays up, right? You wake up this morning, and the market is not below the 50 SMA. That means it's still in a long bias market until stated otherwise. All right. If it's a long bias market. The only way we would look to take this market down to here is if the volatility index were to break out its 50 SMA like you saw pre-market and just keep rallying, right? And go through a sufficient breakout. I mean, it did, right? It did it. It had a breakout, a back test, and look at that bounce. That bounce right there, that pre-market bounce you saw on the VIX this morning, that was enough to create that short there. That was the short, right? It was the volatility markets trying to hold its uptrend pre-market that allowed us to sell the market off early like that, okay? That's all that's happening, okay? So right now, 684.40, that would be our downside. I'll have to double check, but that would basically be one of our downside destinations for the market today with a successful VIX breakout. So if VIX successfully breaks out, yeah, we'll probably try to take the market to 684.40s. But right now, it's not the case, right? So, yeah. Anything else special happening? I don't know. I'm going to go back to looking at some random penny stocks for a second because it's also 8:57. I'm going to be getting a cup of coffee here in a second too. Oh boy. Anyways, I appreciate you guys tuning in. Thank you so much. If you like hanging out, you like me screaming in your ear the same thing over and over every day, feel free to, hit the like button or don't. Can't make you do anything you don't want to do. But yeah, so the portfolio here, smart money portfolio, this thing is up, I don't know, some 4.5%. It doesn't really matter. The only thing I'm happy about is that it's beating the S&P 500 returns, right? So the objective of the smart money portfolio is to obviously hopefully beat the S&P 500 returns. It's doing that currently. Yay, team. But as we said, this is going to be a dollar cost averaging portfolio that we pretty much do with you guys until pretty much I stop streaming or until I croak, which hopefully is ways away, but you never know, right? Could get hit by some kid on a Lime scooter tomorrow. So, yeah. But anyways, best performer in the portfolio is VXUS. That is international markets, money invested outside the United States primarily. Obviously, you guys know that I've been talking about moving money into international markets for a little bit, so I decided to do that. This isn't the only account that I have invested in international markets. Some of my other bigger investment accounts, I have money in international markets too. There's been kind of a little bit of an exodus, if you will, small, not big, from United States markets into international markets. I feel like there's little birdies singing the song So I felt it was right to have some money there. And yeah, we still got money invested here. We got some bonds. Again, it's a very basic, diversified portfolio. And the kicker and the satellites really are like healthcare and medical devices. Under the assumption that there's still a little bit of oomph in that market as the baby boomers head out the door. But it's debatable. Everyone's always forward looking. The healthcare market's been doing very, very well, as is many, many, many markets for a long time. But there might be still something there. I don't know. Or I'm wondering if the market's already forward looked their exit plan, and now we're on to like the next one. So we'll see. Yeah. But as more the baby boomer population grows, and obviously they're seeking out more medical advice, surgeries, medical devices, things like that. I would assume a good chunk of their money and their net worths and wealth is going to be getting spent in that sort of industry for the foreseeable future. Ranch style homes, obviously there's a low inventory of those. Ranch style homes are very popular because of baby boomers. They no longer want stairs, they want all ranch style. So obviously it's hard to find homes like that. So these are kind of like those little breadcrumbs that the baby boomer population kind of leaves, through the economy. So one of which, obviously, ranch style homes. Next still is healthcare, medical devices. That's what I kind of see. The next kind of big thing there is going to be estate planning and the transferring of wealth and retirement accounts, wills, things like that. People who are in the estate sale businesses who set up like those showings for all of the things in people's houses when people move and pass and whatever. That'll be probably a pretty popular gig coming up. Not that it already isn't, I'm just saying in general. So these are kind of some of those industries that are going to be affected to some degree by that population density moving. I hate to say it, into their last phases. It's kind of sad thinking about it like that. And, it's kind of sad in the way that my brain works on how these things are going to play out monetarily, but this just is what it is. So those are some things for you to think about if you care. Those are some interesting things to think about outside of the everyone just chatting about AI, so. Okay, yeah, I didn't look at any penny stocks. See, this is what always happens. I always just get on a kind of a little bit of a tangent / rant. Ooh, what is this guy? Is it going to be an absolute scam, or is it going to be halfway decent? See, like, here's something I'm kind of looking at. It's ALUR. Just notice it. It's got some volatility. It just started popping up not too long ago. Basically about 3 minutes ago. From 120 to 222. If it works, awesome. If it doesn't, like, this penny stock's just going right back down to like $1.13. You know what I mean? So, like, I'm just saying, like, you can, like, ALUR, if you want, you can look at it. It's just saying it's just something like to just happens to have volatility, right? And, sometimes you never really know. Like, is something going to be good, or is it just going to be an absolute piece of crap and just go straight back to trend? Right, so if you look at ALUR, the whole purpose is for you to understand like risk and reward, right? If you were to just say you wanted to buy that stock right now, and say you do, all right, then you arguably run the risk of the stock selling all the way down to the price of $1.14 to $1.13, because that's arguably where the breakout started, right? So I don't know, just kind of came across the screen, thought it's kind of somewhat interesting. I mean, yeah, there's a couple things I'm not really. In order to catch those, I got to be up super duper early, and again, just as I go through them right now, I can just already see there's Nothing's at the break spot. Nothing. Yeah. And it's normal, right? Like I said, you guys, you compete. You're competing with computers and algorithms, right? So like you're basically not supposed to be able to buy it at the good spot. You're usually supposed to be able to interact at terrible times. Like that's usually how the market is. Okay. Oh, that note, I'm going to go get a coffee. I'll be right back. Maybe I'll put that on the screen. Getting a coffee. Getting coffee. Be home soon. Alrighty, I am back, folks. I am back. Let's update. I need to do something real quick. Sorry. There's a phone call coming in, and I don't know who, but 1 second. All right, that was a whole big and nothing burger. Where is my software? Okay. Okay, yeah, sorry guys. I mean, you guys know it's basically the same thing as it always is. We're just basically going to be saying swing long the market until the market tells us not to be. But again, with the VIX being around 20, it's creating this sort of choppier environment because obviously people are fearful right? Because the VIX is high, but whatever. Hasn't really resulted in a whole lot anyways. Really just been in a pretty much just a sideways chop grind market. But it is positive. Yeah, it is positive. So, thumbs up, fingers crossed the market continues higher. That would be ideal. So, yeah, let's just see what's our friend Bitcoin doing. Nothing. Okay, sounds good. SLV up into 78. Very nice. Very nice. Yeah, so, for the moment, guys, I myself don't have I would say I don't have a ton of edge in this exact moment, right? So I'm not kind of talking about we're going to try to take the market here, we're going to do this right now, because I don't have the edge in this moment, right? I mean, I do, but it's more or less, it's up to the market at this point. And, I'm not, for myself, I'm not on any level that I think is kind of worthy of interaction or doing anything, right? Another phone call coming in here. It's probably the one I'm looking for. I don't know. Maybe 1 second. Alrighty, welcome back, ladies and gentlemen. That's a good cup of coffee. Oh yeah, that'll get you spicy, you know what I mean, jelly beans? You guys know what I mean, because you guys are jelly beans. So the real question becomes, is the market going to be cool today, or is it going to be lame? Well, it's going to be cool in the sense that there is always guaranteed to be at least one possible trade or magoo to make. But is it going to be the trendy, flowy moves that everybody wants? That's always the question. Again, just doing some due diligence, running through the market, seeing what's going on. Z's. Yeah, and actually, I should probably just, maybe I'll update the ticker scroll thing, because probably be a good idea. Let's see. So I put some more in there that the market is on the long side as it relates to SMA trend and market makers. Because I feel like, yeah, anytime someone really just kind of pops into stream, they're really going to never have a clue. So that's kind of like my best effort there for the morning. Also, yes, I will be snowboarding in Big Sky, Montana. I'm leaving on Sunday. I will not be streaming, guaranteed. It's just, yeah. Nope. Between snowboarding, having a few beers on the mountain, I can assure you your brother is not going to be waking up looking at the market those days. I'm going to be beat tired. So, anyways, so that's going on. See, this is kind of what happens in the winter. Is me and my wife end up doing a lot of traveling and going places. So I always get hit with a bunch of basically weeks that I'm not streaming or looking at the markets a whole lot. Well, it's not entirely true. I'm always looking at the markets. I'm always on my phone looking at them. But streaming and actively sitting behind my computer trading and investing and things like that, so it's not going to be happening. But, yeah, you get the point. All right, what time is it? 9:17. So, again, just trying to think what I might try to do. I haven't really thought extremely hard on the market, only because it's just been so choppy lately, and we're not getting a ton of follow through, but it's just one of those situations where, again, by the way, you can see, remember we talked about the VIX and, what would arguably happen with the VIX. Was that it would just basically trade back towards the 50 SMA, most likely, etc. Well, anyways, yeah, there's the VIX. Right back down to $19. Well, not quite, but it got to $20, right? So we're talking. The exact calculation is like right around like 19.95, something like that. So, right. So think about it. This is all that's so what has happened today, guys? Ready? VIX breaks up, pulls back to support. It bounces support. That's what caused the top in your market. VIX is now pulling back to the algorithm level. As a result, your market's gone up again. If today the VIX breaks down, that's going to be the catalyst we're going to use to then further take the market long. Okay. If we open up on the day, whatever, and the VIX goes, I'm not going to break down, right? And it wants to hold or go into a long, then we're going to be short the market today, right? So, and when I say short the market, we're going to be not short the market, we're going to be pulling the market back, right? There's a difference between being bearish the market and pulling the market back. If the VIX holds the 20, we're not going to be bearish the market, but we're going to be pulling the market back today, or at least stalling to pulling back, right? So it's very dependent on the volatility index today. It's not that we're not focused on the market. It's just the market. Look at where the 50 SMA is at for the market, right? The 50 SMA is the blue line. It's where my arrow is pointing, right? That's the algorithm level on the market for the SPY. The algorithm level that we're focused on right now for the VIX is it's at 20, right? So where's the VIX right now? It's almost at 20. So we're not watching the market. We are, but you know what I mean? We're using the VIX market to then help us dictate how we're going to move the other market right now. Because this is the one at the decision point right now. So this is the catalyst market, right? So we're going to be using the VIX market today to determine if we want to, right? Like for example, instead of pulling the market, like ready? Right, because there's a bunch of people, right, thinking in your head, like, oh, they're like, all right, well, is the market going to keep going or is it going to pull back, right? Like, and same thing here, same thing. I'm like, well, should we keep going long or is the market going to kind of chill out for a second or maybe go into a bigger pullback, right? I could look at the patterns and I could look and go, oh, well, there's a candle down here with the fair value gap. Okay, well, there's something up here and there's a gap and there's a fair value up here and there is maybe an SMT Willie Magoo. I don't know, right? Whenever you look at candles and stuff, there's always something, right? There's always going to be a gap. There's always going to be a fair value. There's always going to be a this. There's always going to be a that, right? Same with the SMAs. There's always going to be an SMA somewhere, right? So for me, it's less about, well, is there a fair value gap or is there those are great things, by the way. I'm not saying they're bad. What I'm getting at is we're picking trend direction based off SMA calculation, not fair value gaps, okay? Fair value gaps and things like that, they can be areas to go back and back test, right? So for example, like let's just make it up, right? So there's a fair value gap up here on the VIX and there's a fair value gap right here on the VIX, right? Which one you want to go to? Be my guest. I have no idea. What I do know, though, is that when the markets are above the SMA, we generally try to take them up, right? When the market is below the SMA, we generally try to take it down. So any one of those fair value gaps, I'm cool with, right? Doesn't matter. Whatever direction the market wants, we'll go that way. Many times that is determined based off of the 30-minute system. Right now, the VIX is positive on the 30-minute system, all right? So if today the VIX decides it wants to break down, then we're going to take the market further long up today because that's going to be a catalyst to do so, right? If the VIX does not break down the market, the VIX does not break down, right? And it ends up bouncing and going into a long, then obviously your market's probably going to go down, right? If the VIX just back tests support and just like kind of hangs out for a little bit and it's just kind of being slow, then we're probably not going to see a ton of volatility on the market to start the day, right? These are all what ifs. I don't know exactly how it's going to play out. I've just seen it play out so many times that there's only so many options that can really happen. And it's our job to kind of try to pick which one of those options it's going to end up being. And so that's that, all right? I myself, I want to have a bias, but right now my bias would be up personally because of just how the market's been moving. And the reason I say this because it's almost like, why wouldn't we see the VIX backtest 1990? But either way, I'm kind of indifferent. So like I said, I'm going to be looking at the open for the VIX to either break down or break out that SMA calculation. And for me, that's going to be a little bit of a catalyst to determine if we should keep pushing market up or if the VIX starts going crazy, if we're going to start pulling the market down. That's all we really got. All we got, folks. But now I'm just going to shut up and think to myself a little bit longer. Yeah, and it's not like we can really use the 1 hour level on the VIX other than a back testable point. So if it's back test, it's back test. There's really no edge there. The 4 hour is still positive. We'll go to SPX real quick. Let's just double check the 1 hour. The 1 hour is positive, so it's not like we can target the 1 hour up. It would only be a back testable event now. 2 hours positive, 3 hours positive. It's 4 hour daily. Daily is back testable then. We should not use that's not going to work. What am I doing? I don't know what I'm doing. Yeah, that's over the daily. So the daily 50 SMA is now positive. So that's daily getting positive, 30 getting positive, 4 hours positive. Yeah, a lot of long terms positive here. Again, I can't really lean bearish for the moment. I just have to keep grinding the market. And when I see lean bearish or lean put, it's just like I said, we're not even bearish, right? Hold on, let me rephrase that. All right, remember we're long since here. Since this point, the market is long bias, right? We'll be bearish below, right? Anything discussed about pulling back, this being bearish, it's are we going to prevent the long, right? This is a long market. Is there anything that I'm reading in real time that can be used for a short-term kind of directional trade? Or is there anything that comes in now that's going to prevent this long from working that then takes it back to the 50 SMA? Remember, whenever you're in a long bias market, the only opposition you're thinking is the market going to stop, go back to the 50 SMA, or is there going to be a pullback right now while we're in the uptrend? That's all you're thinking, right? Or where support's at, you know what I mean? It's not like, I would never look at today's market and go, I'm going to buy just a ton of contracts short because the market is meant to break down. It's not. It might, but it's not, right? And the reason I'd say it's not is because if it was meant to break down, then it would be below the 50 SMA. Because no meaningful breakdowns ever happen in the stock market without being below the 30-minute 50 SMA. They're just pullbacks. Just like you saw yesterday. Look at this whole, this. Everyone's like, someone could be like, oh my gosh, the market's breaking down. No, that's a pullback to the 50 SMA. Right back up. Because we're in a positive market. Right, this right here, that was market turning negative, right? This was the market here turning positive for a short period of time. This is a pullback consolidation. This is the market flipping back positive. And that's your pullback to support and dip, right? Anyways, you guys know, we've said this a million times. We said it a million times. You get the point. I don't want to repeat myself for forever and everyone just to be annoyed. I don't want you guys being annoyed. Again, it's just a long bias market. It's a positive market. All you do is just basically cross your fingers, hope and pray it goes up. That's all you can do. When people say hope and pray is not a strategy, I can assure you it's literally a strategy. Want to know why? Because as soon as you buy anything or sell anything in the hopes that it continues going in the direction of your purchase or sale to make money, then you no longer have literally any control. The only control you have is basically buying and then doing nothing, right? So if you buy, you are no longer putting in liquidity to the market to help it go up. So now you literally just have to hope there's somebody else willing to put liquidity into the market that then makes it go up. That's all I can do. So literally, hope and pray is in fact the strategy of all strategies, because once you execute a trade, literally it's up to everything else but you for the market to continue going up, which then becomes, I hope. So it's like, I hope I buy something, and then Wall Street Bet starts pumping it. I hope. One can only hope, right? So far, the long bias market is holding true. Would you look at that? Would you look at that? Oh, it's market open. Wow, that's moving a little faster than I thought. Okay, cool. Again, no big plans for the day, guys. Just expecting we're in a long bias market. That's pretty much it. And hoping it goes up. Yay. Thumbs up, people. Woo. Yay. Hey, market's going higher. No way. Who would have thought? It's almost like the market's on the positive side of trend. And there's no reason to really be extremely bearish. I know the VIX is high and it's at 20. A high VIX is irrelevant of simple moving average market maker trend positioning. Oh my gosh, look at the old McBoomer, McSchmoomer. The volatility index has broken down the 30-minute and the 1-hour trend. So as you can see, right, market is slammed up. So so earlier we said we're going to watch the VIX. If the VIX breaks down, we'll be more long biased the market, expecting the market will continue going up. As you can see, the market blew up into the open. So it was really the market going up that then resulted in the VIX breaking down. But you can kind of see how that whole thesis comes to. So this was a day where instead of the VIX really breaking down and giving us the signal, the market pretty much just pumped right at the open. And as a result, the volatility index is now below such levels. Now, arguably, we could be looking at some point for a pullback to the 1-minute volume-weighted average price of today's open. Again, we're not short the market, we're not bearish the market. There's no point to be bearish the market for the time being. The market is positive, and currently the volatility index is below its 30-minute 50 SMA. It's below its 1-hour SMA. Not that that's going to, continue happening indefinitely, but for the moment that's the case. So in the moment in the market, you're not seeing bearish selling because, well, it's just what's happening. We also put in a new dip in the market, so that's going to be our current 1 minute support. So based off the way the market's moving, it's got a lot of volatility up, so, or well, some volatility up. I don't want to say a lot of volatility up, but, some. Yeah, I mean, don't really have much more to say other than just these two little 1 minute levels on the chart. Those are basically a couple pullback areas that we're expecting the market to pull back down into for the moment, give or take. The one fear I have about the market continuing long immediately is maybe it needs to backtest the 30-minute and the 1 hour VIX breakdown. And if we do, then we should stall the market for a second or two. Wow, interesting. Again, there's that pullback into our first 1 minute volume weighted average price as shown. Obviously, if it dips below, we'll go to the next one down, etc., etc. So obviously, we're going to pull back down into this 1 minute VWAP down here. As you can see, I'm adjusting that box a little bit. And that's, again, like I said, if you look at the VIX is going to push up now to about, I don't know, whatever I just said. Because it hasn't back tested its breakdown. So what is that? The VIX still has a little bit more to go there, actually. To the upside, that is. Maybe. Let's see, 1975. Again, do be careful here. The VIX continues pushing up to like 19 to 20. We should see the market slide out a little bit more. All right, nice little push off the 1 minute volume weighted average price for the day. VIX is still below, what is it? VIX is still below the 30-minute. VIX is still below the 1 hour. So, I mean, like I said, while that's happening, market is more likely to grind higher. But I did think we might pull just a slight bit more there as the SMA calculations try to fully test, but nonetheless. Phone call coming in, 1 second. All right, we're back here. Welcome, welcome. Volatility index back to the SMA. So this is what I was talking about, is if we went for a back test to the 50 SMA, we might still kind of see this market pull a bit. So anyways, VIX is right back to its 30-minute 50 SMA. If we end up breaking out this, we should see the market actually continue to dump here some more. So again, be careful with VIX breaking out over 20 or so, give or take. Again, so VIX being up over 20, that's not a good sign for the market. That's the VIX breaking out volatility. So fear is coming back in, right? We've triggered the break over the SMA. So that's fear coming back into the market right now. Something else we might arguably do is a 1 minute top down here. Yeah, so we'll look at the 1 minute volume weighted average price off this high, because that's a pretty good drop, right? So that's a valuable area to focus on for, arguably, pushes back and then, resistance down into or whatnot. Looks like the market internals for the day are pretty much just selling off. Nothing's really doing too good there. Interesting. One of the, let me just double check something. Yeah, I would say one of the worst case scenarios for today is the market again resets all the way back to the 50 SMA. That would be pretty crappy, but it's not impossible. That would be all the way back down to 684 potentially. All right, let me just double check. No, what am I talking about? See, that's, I don't know. Oh, I had it wrong right there. 685.30. I was like, that doesn't seem right. That would basically be worst case scenario for the market today. Yeah, I mean, VIX still up and over the 50 SMA, so that's still positive. Now let's check this guy. Yeah, I'll say market internal still pretty much downside here. Let me bring up the volatility index just so you guys can kind of get a feel for what I was saying, right? So if you look at, see, these are the things we watch. Literally, these are just these slight little things. Also, we just hit the pre-market bottom up 30 minutes, so might constitute for a little bit of a bounce throughout this period. Maybe back up to the 1 minute VWAPs, kind of in that area of like 688.17, give or take, to 688.40s. 30-minute VWAP off lows like 687. Anyways, just in general though, see how the VIX is getting over this $19 area, like 1986. So this is the VIX getting positive over its 30-minute trend. So that's something we follow, right? So below it's under, now we're over. Arguably not the best case for the market. But like I said, it's been a challenging market as of recent. But either way. If we do start to give up like this, like 687 price point could also constitute for more sliding on the market to the downside. That's the pre-market 30-minute VWAP area, so obviously below that, a lot of times can also add some more speed to the downside. But we'll see. Still have to obviously get below. And then obviously, like the worst case scenario would be the market sliding all the way down to 685.43 and back testing the 50 SMA. That would be worst case scenario for longs. There's another dropout from the market as we kind of, I don't want to say we really got below the pre-market 30-minute area, but we're slipping a little bit, nothing crazy. So, yeah, I mean, like I said, with the VIX breaking back up over 20, that puts obviously just volatility back on, you know. If we do end up getting down to the 30-minute on the market, at that point we may look for a little bit of a bounce down there. Big flip, the VIX gap down through off the longs. All right, so we have effectively retraced the volume weighted average price of the high of day. Again, common thing we do. I know there's a lot going on here. Like I said, today is not the easiest sort of day, mainly because we have the VIX interacting the 50 SMA. VIX is also priced at 20. The market is positive, but the VIX is positive. See, this is what I was saying is we have a market where there's not total confluence, right? When you look at the VIX broke out positive this morning, but the market's also positive, right? So that's creating the short down while still in a positive market. Yeah, that's annoying. There we go. Again, VIX is still positive, so obviously for the day right now, volatility is still elevated, or the VIX is elevated, so people are a little bit more fearful right now, obviously, or market's slightly more fearful, just how the VIX is slightly priced. Doesn't necessarily guarantee future movement 100%, but it's simple just to read that the market's obviously slightly more fearful here this morning. Now, obviously, with markets being a little more fearful, it's putting a damper on the market. Obviously, the market on the VIX transitioned to positive at 9:40 in the morning. So since 9:40 in the morning, which was the big red candle down, the VIX has been in what we would say is like a little bit more of an elevated state. We obviously know it's elevated because it's at 20 or so, $20 or so, but we also know that it's elevated in terms of pricing because it's over its 50, right? So it's it's an interesting morning because, like we said, the market's positive and the VIX is positive. So one of those markets has to be lying. And now, right now, obviously, I'd be lean bearish the market, which we are, just because the VIX is positive. With the VIX breaking out, we look to pull the market down, even though it's positive, right? So I think Sam L said something about 6, 8, 7, 8 on the market, right? Or just in general, ES, MES, and just in general, right? So for us, like in general, we are going to be targeting, and we are, as far as this, like that is our downside maximum destination for now, because we know that the uptrend is intact if it's over this level, right? So the market can pull all the way down to there and still be in an uptrend, right? And so in general, we're just, as long as the VIX is positive, we can't look to be extremely long bias. And one of the maximum downside targets right now on the market is $685.43, simply because that's where the market maker algorithm shift level is at. So yeah, I mean, and remember, like, it's the same story as always, guys. Right now we're in the pullback phase of the market, right? We're not in the breakout phase. We're not in the continuation phase. We're in the pullback phase because the market is positive, yet the VIX is positive. So the VIX is telling us to be cautious and pull the market back, even though it's in an uptrend, if you will. You know what I mean? So yeah, basically 685.43. I think Sam in chat said something about 687. I mean, like I said, those are about like the maximums we might try to take the markets down to. Yeah. I mean, if I bring the VIX back, you'll see it pretty quickly. All right, we'll go to the 10-day 30-minute here. All right, so let's look at the 10-day 30-minute chart here on the VIX. Ready? So there you go. All right, you see how the VIX broke up and over this price point here? All right. Now it also broke down. When it broke down, we used that to basically take the market long up in the morning, and then it broke out, and now we're taking the market down. So if you look at where the price of that SMA is at, it's right about 1987, right? And if we go look at a pre-market chart now, all right, you can see how we're using the price of 1987, and I could put it on a 1 minute too. Right, so you see how we're using 1987. Ready? So we start with a big gap up. Here's our first initial pullback to support bounce. That's how we took the market long to start the morning. And then obviously we tried to back test support going into the open. That's how we took the market long pre-market and into the open. And then the VIX wanted to back test its breakdown, and then it just rebroke out. So it rebroke out at $19.85 on the candle of like 9:40 this morning. So since 9:40, the VIX went back to positive. So fear was triggered back into the market at 1987. So since the 9:40 candle that shot down this morning, we've been bearish the market because we know the VIX is elevated and fear has broken out once again on this day at the time of 9:40. Literally at 9:40 in the morning, that price shift is volatility shifting positive. Fear up, market down, right? So there's another beautiful trading day. You really can't complain, right, guys? I mean, it's beautiful when, well, market's just a fun thing. So, you know what I mean? There could be a fair value gap up, there could be a fair value gap down, but it just depends what way the market makers want the market to move, right? So right now, again, we have the VIX positive. We're going to sell the market down. Two 1 minute gaps on ES 6875. I thought I looked. I didn't see one. Maybe I just didn't look close enough. Oh, maybe I'm looking. I think I'm actually just looking at the wrong number. Gosh, I hate this chart sometimes. Yeah, I mean, obviously, yep, you got a gap down there, 6875. Which also lines up with, 50 SMA stuff are pretty close. Maybe not quite, but actually maybe a little bit lower than that. But either way. Yeah, so let's throw on some new 1 minute volume weighted average prices because that's pretty much going to give us an idea of where counter pop may be and then the continuation of the current trend. Looks like we're on the second leg of the down move too. Let me delete some of this stuff. I got a lot. It's kind of busy now. It's kind of a lot going on there. All right, so pretty much there's the market counter popping back to the SMA calculations there. So if the trend's going to stay down, arguably this is where you'd want to see that take place at. It's also a really strong candle though. So there's the, the pushback to volume weighted average. Let's just double check our 685 price. Again, we would really like to see the market go down to there. That would be fun. It's actually not 685, it's less than that. It's 685.50, or as close as possible. I mean, 685.50 again would be the back test of the 50 SMA. And you guys know, right, what does the market do? The market goes in phases, right? It goes in phases from breaking out the SMA and running, right? Pullbacks to the 50 SMA. Decision to either bounce the SMA or break down the SMA. Pullbacks to the SMA. Moves away from the SMA. So the market just pretty much goes through a constant game of breaking away, pulling back to, breaking away, pulling back to. And if we're on the pulling back to, then that means the market is going to go to 685.51. And if we're meant to go into a downtrend, or at least attempt, then that means the market's going to go to here, and then it's going to break down here. So that's always it, is that you're trying to determine kind of what phase you're in. And for me, I would say the phase we're in is we're obviously in the pullback phase. We're, like that's a no-brainer. Oh, look at the dunk right to target. Oh. That's spicy. That's spicy. Anyone? Anyone? Oh, no, no one. That's right, because I sit in my office by myself. But cheers. So remember, guys, you're just trying to figure out what phase of the old market magister you're in. Thanks for tuning in. It's been a fun day. All right, so now we're in the decision phase, which is the decision phase is, do we want to continue breaking down? Do we want to hold? I know a couple in the chat maybe looking at the 1 minute gaps on NQ or ES. Maybe they're down a little bit lower. Maybe it's a bounce spot. Wait a second. Let me see where that's at. Actually, that's interesting. Hold on. I'm going to have to do some research on that. It looks like those gaps might have literally... I'm wondering if those gaps started exactly at where the frickin'... the long started on. So I wonder if there was gaps left behind on ES, specifically where the trend changed positive, because that would also add confluence to my systems a bit more. Well, I don't know unless I put on all 50 SMAs. The internet really just does not. You know, Sam and Ricky. Yeah, I think YouTube would honestly break if me and Brandon streamed every day together on YouTube. The internet wouldn't be able to handle. I don't think, at least. Also, praise to the Lord that you have Brandon's back right now, because he needs it. I'm sure he does. Okay. So, anyways. Why am I being silly here? Oh yeah, we gotta look at. All right, so where are the new 1 minute volume weighted average prices? So arguably market's probably looking to at least push back to about that 1 minute volume weighted average price on the upside. So it'll probably look long in this area. It's not even looking long. It's just these are how algorithms, they might be trying to hold the 50 SMA here for a little bit, just in general. But like I said, we're kind of at an interesting spot because we're at the decision moment for the market, right? Where it has to decide if it wants to hold the 50 SMA or if it wants to break. Now, these things can happen in, over the course of minutes. They could happen over the course of 30, 40 minutes, a day, etc. But now the algorithms are back at the deciding game. So remember this morning, we used the volatility index and its breakout to pull the market back. We've done that. So earlier we used the VIX because the VIX was at the 50 SMA to kind of be the catalyst driver of whether or not we continued along in the market or we pulled the market back. The VIX broke out, so we pulled the market back to the 50 SMA. Now the market is at the 50 SMA. Now it's kind of like all the programs and all the orders that are going in on the market are going to have to decide, okay, do we want to hold the 50 SMA? Do we want to break it down? What are we going to do? So now we've entered the decision phase for the market, which is, do we want to hold or do we want to break down, right? And how that all occurs is not up to you. That is up to other people. That's up to the system, the market makers, the game in which you don't control, all right? So far, the market has broken down. So let's go look at it. So we have effectively used the breakout on the VIX today to pull the market back down to the 50 SMA target. Remember, the 50 SMA is always the target. Like if you ask me today, what's the downside destination? Well, if everything works perfectly, it's going to be that. It's hard to know that until you kind of see the VIX, in this case, breaking out, right? It took us a little bit to see the VIX break out and go, okay, the market is bearish, and obviously if VIX continues to break out and market wants, and the people, we're going to go to here, all right? So that's done. Now it just becomes basically a game of, okay, how do they want to control the price, above or below, right? So that's where we're at. We're pretty much at the sit back, chill, might see some scalp bounces, might see some scalp shorts, but we need the market to definitively tell us if it wants to break down or break out. And honestly, I don't know. I never really know, right? In the exact moment. Sometimes it works immediately, sometimes not. I'd have to say the market's probably not going to break down right away because that's just kind of the market we've been in as of recently. So, like, do you remember, right? Where did the market on the SPY break down that? Oh, wait, hold on. Where's the 1 hour? So we're below the 1 hour and we're below the 30 minute. That's not good, ideally. But anyways, the market should at least bounce back to back test its breakdown. That's going to be right back here to 687.40. SPY is already kind of doing it. Probably already got its 1 minute volume weighted average price. Not quite. We'll see. I don't want to just keep speaking randomness. Yeah, I hope we'll get better soon too. God, that's so. I'm kind of shocked. Not really shocked, but it's just you wake up. It's just weird. Someone you work with every single day, pretty much for most of your adult life, and then just one day is back in the hospital. It sucks. It's not fun. Not cool. I'm going to clean some of this stuff up. I just want to really get my chart back kind of somewhat clean. Let's just double check. And I'm just kind of double checking everything. I just want to see all my different levels and strategies just to make sure I'm not missing something. So we're below that guy, obviously. And then we're going to be below that guy. What about the dailies? Dailies, no. Dailies back down. 30s there. Choo. Yeah, we're just, again, you're on standby. You're not really long bias right now, guys. Obviously, VIX is broken out. You guys know why. I wonder if we're going to get a long. Oh, I guess it already hit. Never mind, pretty much. Huh. It's super sketchy. I was just saying, I wonder if they're going to do at least one kind of long down here off the gap fill before allowing a true market pull. All right, guys, so you can see that I'm anchored at the, excuse me. Yeah, so we're anchored to the top of the 1 minute volume weighted average. What am I saying? Basically, we're anchored to the breakdown of the 50 SMA. And obviously, if the market doesn't just break this 50 SMA, keep going down, obviously, price is just going to go all the way back into here. So, basically, that's it, is right. If market doesn't just continue down, then you know where you're going to retrace to. So yeah, we're just gotta. I mean, there's really nothing to do other than just basically be bearish below the 50 SMA for the moment. Risk is going to be back to the 50 SMA. Essentially that. And nobody quite knows what they want to do with the market in this little bottom yet. Whether they want to do the continuation or if we're going to squeeze back the 50 SMA at 685.48. If you ask me, that's pretty much what's going on. Either we're going to squeeze back 685.48 in this little immediate, which again, that can only really take place once we break the 1 minute 50 SMA VWAP there. It's funny. Again, this is kind of like, this is like a little immediate 1 minute control point. All right, so it's whether or not they, like said, you see how we just pretty much pinned it right there and down. So until you're over that, you're not going up to the blue. So that's kind of it. Like that's currently the 1 minute trend right now down. Oh, wow. Yeah, if you're in North Africa, I would definitely, yeah. It's pretty much just straight freezing cold here for me. So obviously, there really ain't nothing better to do. Ba-da-ba-ba-ba-ba-da-da-da-da-da-da-da. All right, there's our push back to pretty much the SMA as we discussed. 50 SMA and the SPX is not back tested though, so might need the SPX to go to about there. So as we said, once the market clears that price, we'll squeeze back to the blue. So there's your squeeze back to blue, as mentioned. Again, volatility index still positive, market still slightly negative as it's just basically transitioning below the SMA. So we've completed the pullback target down to the 50 SMA, and now it's a matter of the markets digesting and wanting to decide if they're going to break down the SMA successfully or if we're going to recover it, right? So that's pretty much the game we're playing. We're in the decision game, right? So this isn't the, not always, but I'd say it's not generally easy flowing moment. We're in the deciding, do we want to break it down and continue, or are we going to revert back to SMA and turn positive? Right now, like 1 minute MACD is positive, 5 minute MACD is not, 15 minutes not, 30 minutes turning bearish. So it's like we don't really have a whole lot of positivity right now in the market in this moment. It's 10:30 and the market, market's done some cool stuff today, right? I mean, big pullback targets. Jennifer, interested. Lots of people. Again, obviously, if markets don't just break, remember, it's always the same thing. If the markets don't break down, that's going to be your counter target, right? So in terms of new trades or short-term scalping, your scalp trades would be back along to here. Otherwise, you're just bearish and down. So I myself personally am not long biased this market. I do not have any longs on long the S&P right now for UPR 3X leverage ETF. Why? Because the market's not bullish. So we're just basically in a neutral to bearish state on the market until basically stated otherwise. Stated otherwise, it'd probably be until I say so or until the system says so. Bitcoin, not really doing anything good. If Bitcoin trades down into like this 62,000, we can look long in there. But it just depends whether they do it during the live trading hours, after hours, when you're sleeping or not. Just depends. You got to be basically there for it. Or you can just start putting orders down there if you want. That works. Oh my gosh, I hate trading views sometimes. It's so lame. Hilarious. Again, market's just kind of doing its chop, slow grind down. It's in a neutral to bearish state, so it's not a long bias market for the time being, etc., etc., etc. Again, for the time being, it's just basically a pop to sell market until minimum 1 minute volume weighted average prices are recovered. Again, it's just a pop to short market for the time being because the market is below the 50 SMA, so therefore the market is on negative territory. The volatility index is positive. There will be no sort of counter retrace push pop until minimum the market is above the 1 minute 50 SMA volume weighted average price, at which point the target of the bounce would be $685.46. Those are not activated, so it's still just a grinding down, a pop to sell market. Bitcoin still pretty much doing a whole lot of nothing. Again, our counter retrace target for the market is the blue box, or blue box is the green box. It's going to happen. Well, there it goes. There's your counter retrace. So those are the algorithms squeezing the market back to the 1 minute volume weighted average price trend. Essentially, this is where the market must find its next wave of resistance to prevent the market from squeezing back to that price. So this is pretty much how the market is set up, just like that. You see how resistance instantly came in right about that zone, right? So we're just tracking, again, previous volume from here down, and then that's a low risk entry in the direction of the sell move. And then obviously if it's above, target would be back to blue. So that's how you can do, so like in the scalping world, right? So let's think about volume weighted average price where it was just at. We'll do this one right there. So right there. So this could have been a trade on a scalp, right? Which would have been short, or is it long, short? Where is it? Short position. So there you go. So your risk to reward, right? You can do whatever you want, right? So essentially if you did profit down to previous low, your risk or your experience of drawdown was, 0.13 down to bottom. So what's the risk to reward there? A 1 to 6 in terms of scalp, but not really because that's your drawdown. So what you experience if you put entry at VWAP there, your drawdown was, in terms of the SPY was about 12 cents. Your profit down to the previous low would have been, $1 or something. Almost $1 down. So right now you're at a 1 to 8, a 1 to 9 in terms of drawdown to what you've actually gained. So like we can already anchor VWAPs to the high of that and to the high of this candle, and then we just pretty much know at some point, because markets always go up and go down, but now that's another valuable area on the 1 minute chart for the candles to go back to. And really it's just the objective of the market to screw over everyone betting selling on that leg, right? So either way, we're in a neutral to bearish market. No point of being long bias. For that matter, we haven't been long bias all morning since the 8:40 candle, 9:40 a.m. candle today. We've recommended you be bearish and watch bearish pretty much all day, and that bias has not changed, and it will not change until the system tells us to change. That would be the volatility index going into a downtrend or the market going into an uptrend, neither of which have happened. So therefore, the market is still downsided, and the system suggests the market is still downsided. And I suggest that I should go get a coffee, because that sounds really good. 1 second, because that's the retrace into the volume weighted average price as we suggested, right back up to about there. So pretty much that means that the 1 minute micro chart as retraced its volume weighted average price, and if trend wants to continue going down, then arguably the 1 minute market would try to do so here. Blah 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 blah. Won't go into it too much. Again, this is very short term 1 minute micro stuff, but anyways, you get the point. Yeah, I'm gonna get a coffee. I'll be right back. Keep watching trend down, etc., etc. Sure. Alrighty, we are back on. We are back on. Gotta love a good hang now. So, yep, market is just a little bit there. Let's see, what about that guy? MNQs. I mean, yeah, so you can see, SPY is bearish, MNQ is bearish, ES is bearish, NQ is bearish, QQQ is bearish. If we went through a handful of the big name stocks, many of those are, well, actually, that's kind of interesting. Apple's positive. Let's say some of the big names might be negative too. Amazon dropped back out. That guy. Oh, this video's still up. Silver's putting in a decent day. So QQQ's already done its 1 minute volume weighted average price of back test. Let's see, that guy's done it too. Another 1 minute volume weighted average price test. Again, just a slower grind down. There's a ton of separation on the 5 minute MACD too. So it's gonna be hard to bounce that. Now, it's just harder to bounce a market when you have a lot of momentum down. It's not even that we're trying to bounce the market. It's just if you're looking for a bounce, it's going to be very, very challenging. Again, this is a down market for the time being. and also the market shifted negative, etc. So let's see how is VXUS doing today. VXUS is down, which again, if the market's going down, generally VX would, a lot of times be going down too. It's just kind of how it works. But VXUS is obviously, so that's another thing too. If you look at VXUS, right, that's a big portion of our portfolio right now, international markets. You can see that VXUS is it's positive, right? So VXUS positive here, and not negative, right? So if you go look at the United States market, all right, what are you seeing, right? It's far more choppy, it's more downside, and it's below its 50 SMA, so arguably starting a sell move. Meanwhile, if you go look at VXUS, some of the international market is still positive, and it's well above its 50 SMA. So this has obviously gone through its breakdown, and you can actually see a perfect bull flag right there below the 50 SMA, then break out the 50 SMA. So it's done its breakout, it's done its long, it's even pulled back and continued higher. It's currently going through a pullback, right? So something like VXUS, it's currently in a buy signal, right? So you have to decide, are you going to be doing the pull back to the 50 SMA and resetting trend, or continuing higher? That's the game you're playing with VXUS right now, right? It's either continuation higher or reset 50, right? Just like it was back here, right? It's in the breakout, it's going. When it starts to get red, is it pulling back to the 50, or is it pulling back to continue higher, right? So let's, for example, real quick, let's just say this was the SPY, right? So when it comes to the SPY, we would be market is breaking out long. Generally, when it's more than a pullback and it's going to reset the 50 SMA, that's generally when the VIX is breaking out its 50 SMA, not when the VIX is priced high necessarily, all right? So, like today. So what happened today? Okay, if we bring up the VIX here, if we look at the VIX, right? So what happened today on the VIX? Okay, yes, the VIX is priced at 20, but look, the VIX broke out the 50 SMA. So the VIX is starting a breakout today. If the VIX is starting to break out, what's the likelihood the market goes up? It's less. And if the VIX is successfully breaking out its 50 SMA and going on a momentum move, then why should the market be above its 50 SMA, right? It shouldn't. So the story goes, when the market goes into a long trade and you're deciding, should we pull it back to the 50 or is it a pullback to continuation up? Right? You only look to, the market is positive and the pullbacks are meant to be bought and continued up unless you see that the volatility index is starting to break out. That's when you know it's more of a serious pullback that can then lead to maybe resetting the 50 SMA, all right? So if the market's positive, but then the VIX breaks out, that's a more serious pullback that you should be concerned about. Otherwise, the dip will probably get bought and the long would continue. And so that's kind of how we started our day. We're like, okay, is the market going to remain below the 50 and break down? If so, then it's a dip will continue, right? If the VIX breaks out, we're going to look to really pull it back. So that's how you can always see that we always kind of know like how we're going to try to move the market, but it's always still going to be dependent upon the market, right? We don't control the market. It's, are we going to stay positive? Are we going to flip negative? And a lot of these things we don't entirely know. We can have ideas about which way something might go and why it can go all the way down here, but again, a lot of it's determined based off the algorithm levels on volatility level or on volatility indexes and major markets. So that's how today we've been able to, flip bias a couple times, right? You heard me say like, oh, we're going to look long bias. Like the market's just long bias right now, right? It's because the VIX was down below its SMA. We know that if the VIX is below the SMA, it's hard to pull the market back. So we're just long, right? And then the market opens. And what happens? The VIX creeps up, starts to break out, and then we top the S&P 500, and then we slam the market down, right? So we were basically used the VIX today to control the S&P 500, if you ask me, to a degree, not entirely. You know what I mean? It's just one part of the market. Yeah. So that being said, oh wait, go back. All right. So that being said, yeah, market's negative. I mean, yeah. Now the fingers crossed would be, you hope, right? The market, your friends, family, the economy, right? Now we hope that, well, I want to say the economy, because again, this is just a 30-minute, right? This is how we just basically move markets in the short term. But all longer term moves in bigger market breakdowns will always start from the 30-minute, right? So that's something, people are like, oh, well, this is short term stuff. I mean, it is short term, but all of your big breakdowns of the market will always start from this time frame. You know what I mean? So like if you were to go back and look at a daily chart, and, like, for example, we'll go back to here. We'll go back to all of these, right? So this pullback here, right? That pullback, and, like this one, and, this big daily yank, all right? Every single one of these, every single one, they all start on the 30-minute, all right? So it's fingers crossed that the breakdown today is not what kickstarts that, right? You know what I mean? If you look at where the, right, because the blue line is the SMA, it should be. Let's go to the 30-minute, yeah. So if you look, ready? So like on this daily chart, let's go back to the daily chart, right? So the daily chart, that 30-minute 50 SMA is this midpoint of the daily candle right now, right? So if this turns into like a big daily yank, right, and goes down, I mean, that's starting from the 30-minute, if you ask me. I mean, you could say it started all the way up here, but that's a daily 50 SMA back test, right? So you have a breakdown, back test daily stays down, 30-minute. You know what I mean? So like that, you have to, it's all uptrends, downtrends, uptrends, downtrends, ready? So like really all we're seeing here and into like today, taking a step back on a daily would be the daily chart broke down, it back tested, and it's not perfect, but just in general, right? So this is daily breakdown, daily back test, right? Whatever it gets resistance, the VIX breaks out, we pull the market down, right? We go down, and so essentially this is like daily back test, VIX is elevated, VIX starts to break out, we pull the market back, then the 30-minute 50 SMA breaks down here, right? So it's daily back test, short-term VIX levels, short-term SPY levels are triggering the immediate momentum to drag markets down. Now your daily candle looks red, right? And now, if you looked back, you would go, oh, well, that's because, it's a back test of the daily. Well, it's true. It's a back test of the daily. Then on today, the VIX broke out, started, increasing fear again. So as traders and short-term, market participants see that, they go, okay, risk should be off. We're not risk on, we're risk off now. Now the market's going down, right? When people are shorting and selling and not buying, and, so it's the ebb and flow of the market. You go look at the 30-minute, right? You see the 30 minutes now bearish, right? You were positive, back test, long. Then today, here, the VIX broke out, so we're using the VIX uptrend to sell the market. And then the market can't hold support. Now the market's down. And now we are in what we call the 30-minute negative territory, right? And we go back positive when we get above. Or this is the 15-minute. Sorry, my apologies. I was like, it looks a little odd. But yeah, there you go. All right, so there's positive market, negative market, positive, negative. We're on the negative side right now. And as you can see, what are we doing? We are saying bearish the market because the market is below now. So this is like, so this is a tactic, right? So VIX breaks down somewhere up here, or sorry, the VIX broke down like right there. Let me rephrase, sorry. The VIX broke out, so the market enters bearish, pulls it back to 50 SMA. Zero support to be found. Zero. Right? Market breaks down 50 SMA. Market back tests the breakdown here. That's the 50. Stays down. Market then back tests the 1 minute volume weighted average price of the breakdown, stays down. Market is just down. This is a negative market. Okay? And it all started today with us breaking out the volatility index and introducing fear into the market at 9:40 a.m. And since then, fear has been elevated. And there's no reason to be long the market. And so I think this morning we talked about, when people try to, like, this is a day where, well, just in general, days where people try to buy the bottom of the market and it keeps falling out. I think we talked a little bit about, like, this is an example of it, right? Where you have a positive volatility market breaking out on the day, and people, are trying to aggressively buy dips that are looking to return to highs or looking to go through big bounces. Anything other than just short-term scalps on a day like today, on the low side, it's a losing strategy a lot of times. Now, you don't know for sure that the market, is going to just keep going that way so aggressively and there won't be a great bounce. It's just when you look and you see that the VIX is elevated like this, okay? The VIX is breaking out, you already know that the odds are against you for being long, right? See, for example, I just know like some of that like ICT fair value stuff, but I'll just throw my very cheap opinion on it, which is that would be like a fair value gap. Correct me if I'm wrong. That's a 1 minute fair value gap, right? So there could have easily been someone, right? Think of it, and it could have worked, right? But so you create a 1 minute fair value gap, right? And someone's thinking to themselves like, okay, I'm looking for the retrace into it, or maybe the fill of the fair value gap and whatever, right? Meanwhile, that candle down, right, happens right when the volatility index breaks out, right? So this big imbalance 1 minute candle, that candle down happens at the same exact time that the volatility index breaks over its 50 SMA and algorithmically goes into a buying program, right? So it's not this impulsive move was. It's literally it's a signal. It's like, oh, okay, the market's the VIX just broke out, right? So then it's like, okay, the VIX is breaking out, but I'm trying to go long into this fair value gap that's there because momentum is truly breaking out on the VIX, So then someone could be like, okay, we're gonna go look to fill this fair value gap. It's like true. But like now when you look, like the only way that's even possible is the market would have to go back over its 50 SMA and then turn into a long, right? And the market, the VIX would have to break down. So that's just not the case, right? So, no. Anyways, nice bearish move on the market. So we can already all assume that the news today for the market's going to be terrible. Whatever you read for today now going on is going to be bad. They're going to say the market's down 1%. The market's dropped $7 a share, whatever, $700 on the SPX. It's going to be brutal. The news is not going to look good. Granted, who knows what it is? Do we care? Not really. It could be they say Donald Trump tweeted something. It could be a regurgitation of inflation. It could be the housing. It could be just because we've already expected there was going to be some sort of correction or recession into 2026, and I think this is just what we're seeing. A slow market, less gains. So I think we're going to get a correction, a pullback in 2026. If we don't, dang, I guess my 401ks and long-term portfolios continue to go up. Shoot. If we're right, then yay. It goes lower, I lose money, you lose money, and then maybe we buy more when it becomes cheaper, and then fingers crossed, hope and pray that the world doesn't end. As the name of investing always goes. So, yeah, that being said, it's just a little bit of a bearish market here, nothing to get too scared about. And then currently the market is just algorithmically holding down the 1 minute volume weighted average price trend consistently. So if we take a VWAP and anchor it there, that gets that guy. This one might not touch because I can see that it's grinded down, but then you would anchor it here and you can kind of follow it down. And then we'll take this guy here. This is the breakdown. So right now they're just pretty much just got a straight up selling algorithm, selling program on it, just driving the price down until whomever, whatever doesn't want it to go down anymore. So these are very dangerous days to try to buy bottoms because you are fully buying against the trend of the market. You know what I mean? So on and so forth. I haven't really tried to think about where a low risk support might even be in this case. I haven't even really thought much about it. Now I'm kind of debating it, like, okay, where might something actually be? Initial thoughts might be around this daily VWAP. So, that's one thing I think about is like if I want to try to buy the low of this day, it's cascading so much that it would have to hit something that is, to me, is extremely valuable. And to me, like the daily VWAP down here could be something that's very valuable because, there's just no point of, unless like for whatever reason something changes and just the way it looks, it would have to hit something that's so drastically oversold that I'm just convinced it's oversold enough to bounce this crazy algorithmic selling day. Otherwise, the patterning of the market would have to change in such a way that I think it would make sense to bounce, right? There's nothing there that would say buy me. So I don't need to try to grab a low unless I absolutely think it's something good. And yeah, so just going to let it keep going down. And it's not like we have a previous buying operation that I think we could go off of. I mean, yeah, these low points. I mean, if someone wants to try to bounce these lows for funsies, sure, it's just, meh, it could work. I'm not saying it couldn't. Yeah, let's see, it's 4 hours, just ugly. It's not looking good. Oh, excuse me. And I think we actually shied the daily 61.8% retrace the other week on this. So I was kind of wondering if we were going to go back and get that guy. Or maybe I have that wrong. I thought we missed it. That's weird. Oh, wait, maybe it was that day and then maybe I just have that wrong in general. So, yeah, I guess we can just continue. Oh, man, that's a good stretch coming. Oh, continue hanging out here. I actually just noticed there's actually a gap on the 30-minute chart with the volatility index. Well, I guess that's debatable. Depends on how you'd read that. But there is a gap on the volatility index chart all the way up to 22. Which actually just ends up being a slight, so there's a slight gap there into the 5-minute. And then there's actually a gap on the 5-minute all the way up to 2269. So, might even see markets just in general and VIX run up to 2260s, going for those 5-minute gaps. And obviously if the VIX does go up that high, then we will pretty much just end up seeing the market drop down to that $680.50 mark there we're kind of talking about now. So yeah. What's going on with Bitcoin? Bitcoin's not really doing a whole lot. It's just doing pretty much, same old jam, rolling down, probably going to go down. I mean, at this point, I'm pretty much just kind of thinking the market's going to work itself down to about 62,000. Well, actually, I still think we're going to go down to about 58. Wait, is it 58,000? Yeah, I mean, I still think we can hit around 58,000 on Bitcoin. That was always my original not always the original, but that was the original VWAP target I wanted to get down to. There is a VWAP that I like, down about 58,000 on Bitcoin. That's where I think we're going to go in general. Yeah. And remember, don't remember. I mean, you guys know the price target of 58,000 for Bitcoin. That target was before the market peaked in October. That was pretty much always our target whenever the bear market came. And again, our estimate for when the bear market was going to start is this vertical line, Alt V. So where I put that vertical line on the chart, that was our expected start date of the bear market for Bitcoin. It was October. No, it wasn't October 13th. Why would I say that? That doesn't seem right. But somewhere in October, I forget. But yeah, anyways, October 2025, that was the expected start month, if you will, of the bear market. I forget the exact date I thought it was, or day. But either way, that was when we expected it would start, and our downside destination and target for that sell-off was pretty much minimum to, at this point, 58,000. When the market was trading all the way at the all-time highs, the price target was like 50,000 to 55,000 or something. So, but either way, so pretty much we've hit the downside destination we expected for the bear market. Also, we've hidden it far faster than we would have expected. We hit our downside target about 100 to 115 days faster than we expected. Also, the volatility index is now up into $22, now filling that gap at $22 we were talking about. Does it get up to 2260? We'll see. I mean, thing hasn't put in a red candle in quite a while in the 5-minute. 1, 2, 3, 4. Well, only 3. It's actually a 333, no jipizzle. So those guys. We still got some room down there to that daily volume weighted average price, about 680.46. So even anyone buying this dip, I still think is going to get washed down to 680.45. Oh, man. Ba da ba 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 dee 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 dee. Now, when this thing does give a bouncer magoo, as it sits now, and when I say when, it's just like if we were actually to get a reversal on this market at any point based off the 1 minute chart, one of the first go-to spots would be 681.80. But now that you have a false bottom here, you would actually need to re-anchor, but we'll wait on that. So what time is it? 11:08, and I don't have to go to the other property, so that's good. So since it's such an epic, wild, down day, probably going to be hanging out for a little longer anyways. Okay. Oh, by the way, yeah, so by the way, I just bought a little bit in the simple dollar cost average portfolio. So I decided to buy a little bit into the SPY on the dollar cost average portfolio. Not that I think this is going to be an be-all, end-all bottom, but now I can just see the market's down to 1.2%. Actually, I think it's going to continue going to some degree, over the next couple days and even into 2026. And I mean, I literally think we're going to have a bear market in 2026 to some degree, or at least a bear market starting to some degree, or some more serious pullback coming. But either way, long story short, just added the simple dollar cost average strategy portfolio. Simply because why? Because the market is currently on sale, going through a pullback. So the fact that it's below the 30-minute 50 SMA now means the market is in fact on sale. So I started a small purchase pretty much right there. And then as it goes down further, I'll buy some more, and then I'll buy some more. And then when the market flips back to positive, I'll start getting appreciation on the return or the investment, But for the moment, it's probably going to be a decrease. And that's okay, because Again, it's not about, for the long term, it's not about trying to time exactly the perfect bottom. It's about actually getting invested when it's on sale. And since I've used M1 for the purpose of the YouTube portfolio and the long-term DCA kind of concept and strategy as well, M1 puts in orders at the start of market open and 3 p.m. So I don't have the control of buying exactly what I want, but it's one of the easiest ways to kind of do a simple portfolio for people to follow along with, I think. So that's why I chose to use it. So a little bit of a disadvantage there. But anyway, so anytime I put through an order, either gets executed at 9:30 in the morning at market open or at 3 p.m. So nonetheless, wherever the price of the market is by 3 p.m., I'll have a trade or an order executed into our long-term investing portfolio there for YouTube. And again, it's simply because the market is in fact on sale now, right? Now the target is there. So there is one of our downside destinations being met. Now, if the market is lucky, there will be a bounce somewhere in this area. There's a lot of selling pressure on the market, so that's why I say lucky, that there will be a bounce in this area. And there's two ways that this can pretty much unfold. Either the market pins the bottom here and pretty much does its bounce, or it actually goes below and then recovers in some fashion and then bounces. And worst case scenario for the market is the market just keeps going down. But anyways, that's arguably a pretty big level we just came into. It's a daily volume weighted average price. Sometimes these work better than others. Sometimes it's just like anything else, can work, cannot work. So arguably there might be a little bit of a bounce in this area, and if there is, the first thing the market's always going to want to do is it's going to want to go back and retest all of the 1 minute volume weighted average price trends. So pretty much each one of those yellow lines and boxes on the screen are all going to be the initial kind of, back test areas. So there would be number 1, and then obviously number 3 would be up top there. So, we'll see if the market's lucky. And when I say lucky, it's just basically to prevent just straight up catastrophic sell-offs all day. You know what I mean? But, if the market wants catastrophic sell-offs, then we can have that. Again, we don't control the market. Market does whatever it wants to do, right? But, we just think a little outside the box, I think, at times. All right, so we've now hit every single back test target we were talking about there. So that's pretty much job well done there. It could go higher than that. I don't make up the rules, but that's basically a good profit target for that initial bounce there. So this is what we would basically call as a first tag bounce, first tag into a key level reaction, right? And then part of it's just thinking of how long the market's been going down for, right? So it's just had a really long day down, and once we've hit a what I see as a pretty good level, we figure there's going to be a reaction. So yeah, that's pretty much all that was. And then what else? Yeah. Now, obviously, the market's on a bearish day, so what we're doing is basically using things for doing an oversold bounce. And now, as the story goes, if the market doesn't continue to keep going up, we end up kind of pulling back here. If this would work, there it goes. Yeah. So now this is kind of like an uptrend level we might use. If we were really going to bounce this low and even try to put in a 1-2 Magoo, then we would look for something like that, arguably, if it doesn't just keep rallying. And when I say we're looking for a higher, it's not that we're really looking for a higher low. It's just if the short-term chart wants to have any degree of attempting of higher lowing, that would arguably be a spot to do so. One second, guys. I'll be right back. Yeah, pretty good stuff. Pretty good stuff. All right, well, I'm going to enjoy my, I guess you would call this lunch for a sec. So I'm going to remove my pretty face. I'll see me scarf down this plate, and I'll be back. Well, well, well. Would you looky, looky, looky. Yeah, so pretty much, yeah, market I think's go. Yeah, I mean, you can see how I kind of have it positioned here on the chart, right? Like upside into upper box or so. If we're if the bulls are kind of lucky, I don't want to say lucky, just in general, right? Kind of upside into here. And this is these are some big levels we're coming into now on the 1 minute, because the 1 minute, this is the volume weighted average price of the breakdown in the selling trend. So arguably, I would say we do got to look a little bearish as we come into this area up here. I think the market has a decent opportunity of pulling back in this area, at least like on the short-term chart, that is. So yeah, just as the market kind of rallies up into here, this is where the market's going to have the opportunity to defend its intraday selling trend, right? If not, then it's just another story, and so on and so forth. Yeah, so that's cool. And then you have your volume weighted average prices of the last dips. So those are all the way down here, right? So if the market doesn't just obviously explode out, then could arguably see decreases all the way down to like 682, give or take. So far, really no resistance found at the 1 minute trend for the day. Doesn't mean it won't happen, but just in general. Nice rejection candle right at the 1 minute trend. Let me kind of take this down. Let me just do that. Probably make it slightly more clear. So, yeah, a lot of times the way I would read the market like right now is just, if the market really was meant to kind of continue its bearishness for the day, a lot of times this would be a big topping point and then the market would start kind of rolling back down. Sometimes it works, other times it doesn't. And then sometimes it's also the 5 minute trend, which is right about here. So this would be kind of a topping area we'd look for on the 1 and the 5 minute to keep the markets down. It's kind of a double-edged sword at times in the sense that it can be a topping area, but also kind of a squeeze spot too, just because this is right. Everyone who's been betting bearish and from the market breaking down the 50 SMA, they're right at their wit's end, you know what I mean? Like this bounce pretty much there's not a whole lot of people that from shorting from here down that are, probably not getting taken out right now is kind of the concept there. But just in general. Whoa. Go back. Yeah. So for the moment, not the ideal spot to be going long. And if they do run kind of a relatively good top and they want to keep the market bearish today, and when I say they, I mean the people who control the market, right? Objectively, this would be one of the first pullback areas, and then all the way down to here, arguably, and so on and so forth. Yeah. Actually, let me look at something else here. Yeah, so remember, you're not long biased this top, you're more bearish just because it's a first attempt into the volume weighted average price of today's selling operation to the downside. So generally speaking, it's not that it couldn't go higher, it's just after such a big bounce off the low of day into such trend, you're generally not extremely long bias going into it. You're more like first attempt pullback with the fingers crossed hopes that the trend actually stays down and it goes into a big sell-off. That's like the ideal scenario. The unfortunate scenario would be, instead of topping and rolling and continuing trend, it ends up not doing that and in some fashion or another gets above and goes to reset the market. I don't think that's going to be the case, but then again, I've been wrong plenty of times. So just in general, the way we kind of read this market in, the simple would be hopeful continuation down. Worst case would be reset. Well, not worst case, but kind of good case would be resetting the market back to the 50. Because remember, right, what are the phases of the market? The phases of the market are the market goes to the 50 SMA. It has to decide, hold support, stay up, or go into a sell move. If so, break down. So market goes down, right? So marketers are going down. They're going in the breakdown phase, breakdown phase, breakdown phase. What's the next phase of anything? If the market is breaking down, the next phase will eventually be oversold bounces and reversals. Here's an oversold bounce that's reversing, okay? At that point, it's then, right, does the trend continue or do we eventually reset the 50 SMA? I would never consider on this day that we're resetting the 50 SMA until minimum the market is above where I'm drawing, right? And even then it can get above here and chop around and still not go up there, I'm just saying in general. So right now we're pretty much in the oversold bounce on this current day, right? And I think there's so much aggressive selling today that this is not going to recover and go to the 50 SMA. I just don't think that's what the market wants. I've been proven wrong a bajillion times in my life, so we'll see, right? I'm just using this as a resistance area to potentially top this bounce and then continue it in the direction for the day. And whether or not it's right or wrong, again, doesn't really matter because the market will be here tomorrow and so on and so forth. And this same setup we're seeing will come time and time again because it comes every single time the market breaks down the 50 SMA like I showed you today. It might look like this, where it's an aggressive sell-off, then a steep bounce back to. It could be one where it sells off for only an hour and then it bounces back to. But in some fashion or another, we'll see the same setup time and time again in the market until the day I die. So that would be the first target being hit. So you remember how we're talking about using the resistance here and then bringing it down to that green box? That would be first target hit there as it relates to pretty much what we're talking about. So we're just using a trend from previous in the day, making resistance. Pulling it back down to the volume weighted average price of the previous 1 minute buy long, like this. This long here, we're just going back to the volume weighted average price of that dip, which is putting the market here, which is now creating these little supports, right? So if the trend's going to continue in the micro, it's then going to be breaking down below here. And if obviously things want to keep progressing, this is where we would expect, if that's correct, this break leads to speed down to the next level, right? If we don't break down, we don't break down. And you can see we're holding right now. So that's just it. So we've pulled back from this initial resistance to where we'd expect it would first go to. Now we got to get through this door. Once that door opens, it opens to the next door, right? So right now we're just basically holding the current 1 minute volume weighted average price trend here. And if in the event that gives up in the market and the people, those and theys, then we go down to there. It's pretty straightforward. These things work pretty much all the time to a degree, but again, like I said, we don't control the market. So it's just all about if the trend wants to give up here. And if it does, then it's just going to go down to the next VWAP level to some degree, give or take some pennies. But that would be our next target down. All right. And so yeah. And now the flip side, there's always the flip side. What's the flip side? Now the flip side is, what about everyone selling the move down here, right? Then the flip side would be this, the VWAP's on this high. All right, so we know we're at the current VWAP target on the down. To get to the next one, we have to break support, which is where we're currently at. And then we'd also have to stay below the 1 minute volume weighted average price trend there, right? So now it's a game of, right, breaking support, going down to next 1 minute volume zone versus staying below current 1 minute volume zone. And that's how you could arguably form up a lower high and down, right? Market could easily do something like this and then down if it wants to. Market can do whatever it wants, but now that's the playing zone, right? This is our football field on the 1 minute chart, okay? This is the end zone. There's another end zone up there, and we're at the 50-yard line. And now it's just a game. Who's going to win the battle? Right? How do market makers want the market to move, etc. And within the 1 minute market, those are kind of the easiest obtainable 1 minute levels, etc. So now what? It's like, oh, okay, markets move back to where? Right there, 1 minute level, 1 minute volume weighted average price. Take that guy off. I'm going to do that. And if we were to go over to SPX, right, now you could see how we're forming. Like, people are probably like, all right, so we got like this, it's good, or wait, sorry, and there's other people in the market that might be doing something like this, like, okay, we got a trend line going like that, and like, okay, so like maybe from this to there, like that, we got a trend line going like that. Meanwhile, we're just kind of looking at the SPY, like, okay, yeah, we probably shouldn't get above that VWAP for the moment, it's resistance, or that's a target, right? So you can see how when we drive markets to and from volume weighted average prices, we kind of create these little high and low points in micro charts and bigger charts, right, etc. See, like right now on the daily chart, like what are we doing, right? Look what we did on the daily. I'm going to delete all this stuff real quick. Ready? So here's the daily. There you go. Like, so what are we doing here? Like, we're just doing a daily VWAP bounce. Yeah. So right now on this day, we're doing a daily VWAP bounce here on that low, driving the price of the market higher, right? And as we drive the bounce up off that daily VWAP, right, we're saying, okay, right? So that's daily VWAP support, right? So this is like daily VWAP support, okay? And 50 SMA breakdown, where were you? You were like right about there. That was the rejection. So we know that. And so the daily setting, sorry, low, high. So we know the daily VWAP was up here. 50 SMA breakdown VWAP's like right about there, etc. So then we know, right, that the intraday, so this would be like your intraday 50 SMA, 50 SMA algo breakdown, down VWAP. Intraday 50 SMA breakdown VWAP, right? So like that's what that is. All right. And then, so basically right now we're kind of, in my opinion, controlling price around daily volume weighted average price levels while simultaneously using the intraday breakdown volume weighted average price to control the intraday trend. And in the short term, using those to back test what just most recently happened here by taking the volume weighted average price of everyone trading the bounce and looking to back test their volume weighted average price, right? So everyone that bought this dip, they're all happy, they're excited, market's going up. We're using the trend above that to now trump their trends and back test them. That's the way I read that. So we're we're essentially short market up here, back testing intraday levels now. That's pretty much kind of, yeah. I mean, Yeah, that makes sense. So, and in my opinion, if this is, when you look at how the market sold down today, it was very stair-step, very grindy, very algorithmically pressed down, in my opinion. And seeing that is what gives me a little bit of conviction that we're still supposed to be bearish even after this huge bounce. I just don't see it as a day where we're really supposed to recover on the day, and so on and so forth. So there would be, so remember how we said, once you take out that VWAP, more speed should pick up, and then we should go down to here, give or take. So that has now happened. Job well done, team. Job well done. Yay. Yay, team. Yay. All right. Now, if no support is found, then obviously, so like that's it, right? So now this is the level right there. That's a 1 minute level. It's not the be all end all. It just tells me that everyone that bought this bottom and all the way up, not many of them are green or still holding. You know what I mean? It's just, we know we've retraced a lot of that long move, right? And after such a big sell off all day, not many people bought the absolute low like we had suggested would be a support, right? Because too many people are scared after this huge sell-off to pinpoint, arguably a low and really try to take it on. So no one, so most people did not catch this low for a long. And then if they did get long, it was probably somewhere midway up. Why? Because they've seen this whole thing go down all day. Every single bounce gets sold into, so they probably wouldn't be confident to buy it in the first place. So by coming back down to here, we've probably effectively stopped out most people off that low point, right? So the way I see it now is just our current little potential support areas for the bounce would be here on the 1 and the 5 minute. Granted, I kind of feel like we're going to take out the 1 and the 5 minute and we're going to drain the market still a little bit lower. But as it relates to the intraday selling target set up from this high, this would be the target that I think would be somewhat a good trade and very attainable. Now, to get below these areas, continue sliding and dropping out. Is it possible? Yes. Is it a part of my first thoughts? No. But can it happen? Sure. So, yeah, that's that. I know that's a lot to take in. Most of the retail trading public is not supposed to know any of that information because it just takes a lot of time to learn all of that and then conceptualize it and read it on a chart in real time and give it all its, rules and purpose of why and when. So, yeah, I wouldn't imagine most people to really grasp that on the first go. And there is a little bit of support coming in, pretty much where you could expect it. Like I said, I'm not by any means a perfect forecaster of the market, or know everything that's going to happen, if you will. There's still a lot of that's the thing. It's the market has variance. It has unknowns. How well is this 1 minute support going to do? Is it going to do good? Or is it going to kind of pop and then falter out and break down? There's so many possibilities. But I already know what's happening right now. It's just, we're just retracing, just simple 1 minute stuff, right? These 1 minute candles, right? If you take the VWAPs and you just throw them on the high, that's pretty much what it's doing. That's usually what the 1 minute chart does to some degree, right? It's like, where was the last VWAP tag? It was right here, anchor a VWAP, and now we're back to there, right? So we're back to that VWAP on the 1 minute. So that's a little bit of a micro resistance, right? So that would be a micro resistance level. If that continues to hold and we work the market down, sure, There's your micro resistance. Now you're at like the halfway candle. So now you're at the golden pocket of the previous green, right? So if the golden pocket doesn't hold and cycle up to 161, you take out the GP of that 1 minute market. You know what I mean? So it's just computers, you know. So there is a golden pocket of the 1 minute getting hit. So it's like you could even fib this candle out. So it's like if we break out that 1 minute VWAP here, it's going to go up into the price of 682.55. There you go. There, just like that. Doink. So there's your 1 minute support hold off the volume weighted average price from the low point. How you can put a Fibonacci on a 1 minute to get the extension of the 1 minute breakout there with it. You know what I mean? There's just so many things you can do on a stock chart. It's endless actually. How is everyone doing today? Oh, yeah, we're still below the 1 minute volume weighted average price of the high. So until we get above that, we can't really expect even the market will be breaking out of like whatever you want to call this. Here's your next VWAP target on the downside hit. So you know what I mean is like if you use volume weighted average prices the way I do, you could find many little multiple pullbacks and kind of little top tick areas, and there could be multiple little trades and setups that you could use and see all day long. You know. I mean, it just goes on. I mean, there's no golden pocket test on this candle. It's like, yeah, if market wants to come back down, do a golden pocket test, sure. There is, yeah, maybe that. The other 15-minute, probably coming into GB. Alrighty, again, there is our pools to the back. The market is pulling back. What a splendid day it's been. I mean, man, it does feel good to pretty much call the bottom of the largest globally traded market in the world after it sells off a total of, let's 690 to a low of 680. So the SPY sells off $10 per share, and we call the bottom. And when I say we call the bottom, it's not like we're like, it's going to sell here for sure and then bottom here for sure. It's just, hey guys, this is a downside destination the market probably wants to go to, could very well be used as a great support. Only one we called all day, and sure enough, it's the bottom of the market. So either we got really lucky, or there's people that follow our stream that have so much money they can bottom a market, or else we're just, I guess, lucky. Yeah, probably just lucky, I guess. Probably just lucky. So pretty much the market is just rolling over as we said it probably would. Looks like we're going to work ourselves down into the 5-minute volume weighted average price Magoo, and the 5-minute average 5 minutes all the way down to wherever. 691.89. So if the market ends up just kind of selling off to 681.61, not a big deal, kind of makes sense, etc. I wonder where the 30-minute volume at's super low. 15-minute volume weighted average price down to 681.31. Yeah, I mean, you could. I mean, you guys already know if you anchor VWAPs to the high, you got your counter levels, etc. Oh my goodness. Change it to setting. There we go. There we go.
Okay. Does anybody know what's going to happen next on the market? Can anybody tell me for once? Can anybody tell me what we're going to be doing? What we going to be doing? Yeah, I mean, there's really not a whole lot to say in this moment. Again, you have the volatility index still positive, market still negative, so you're not swinging along the market. Market is still, in fact, bearish. Obviously, the news organizations are most likely going to be talking negative about the market with it being down. Yeah, so we got from, let's see. From tip rank today, why is the stock market down today? Because the stock market network and the system said so. Downslides 800 points as sell-off ramps up following Trump's global tariff hike. So it's Trump's global tariff hike that's ruining the markets today. It could be. I mean, sure. I mean, yes, volatility did break out today. The market is going bearish. But next week when the market sells off, will it be Trump's fault or will it be AI? The world may never know. Trump threatens more powerful and obnoxious tariffs amid confusion in the UK and the market. Oh my gosh, it goes down. But how did we know that the market could maybe bounce around the daily VWAP support? We didn't know. Trump did. It's not like, right? So like the market's going down because the global tariff hike. And it sells all the way down to $680.14, at which point we recommend there's a good support here. And then the market bounces. But Trump is still doing the global tariff thing. So how is it the market's now going up-ish, but he's still following through with the global tariff hike? And that's the reason the market's down. Wait. Hold on. But how did the market top at the intraday 50 SMA algo breakdown VWAP? Did Trump announce more global tariffs at the VWAP? So is the market going down because of the tariffs, or is the market going down because it's just a big game? It's a big system. And everyone's just trying to move the market how they see fit. Who knows? Stock market today, major indexes plunge amid tariff uncertainty. Those darn tariffs. Man. U.S. stock market today. Dow Jones plunges as the S&P 500, NASDAQ tumble on Trump tariffs. It's all Trump's fault once again, ladies and gentlemen. It's those stupid tariffs. I mean, if only the world knew he was going to say tariffs today. See, that's the thing. See, if you knew that today the news, like if you knew that the Trump tariff things, then you knew to sell the market today, right? No. It's you knew that if volatility broke out, we would look to be bearish the market. And if the market is unable to sustain its market maker level of 685.69, the market is no longer bullish. The market goes into a sell-off. And it just so happens that Donald Trump is talking about tariffs as he does every other single day of the month, right around the time the market breaks down. So that's why it's the tariff thing going on. Remember, price action moves, news follows, not the other way around. When it comes to the stock market, when it comes to individual stocks, okay, buy programs get sent onto the market and then they release news many times. So news happens as buy programs going on, right? But see, for the stock market, right, the stock market is made up of many stocks, right? S&P 500, it's 500 stocks, right? So, like for an individual stock, it's very easy to manipulate in that sense where really you can just send off a buy program on it and then news gets released, etc., whatever, right? Like that's totally fine. But for the market, right, it's 500 individual stocks making up the price action of the market, along with many other economic factors, right? So for the market to go down, actually, it's really not one thing or the other. It's not because really Trump's tariffs, right? Because Trump's tariffs then have to affect 500 other stocks for the market to actually go down meaningful, right? So you see what I'm saying is that for news on the market, right, it could be, again, they'll just use whatever, right? But like I said, it's so for stocks, they can do news first, then pump a stock, right? For the market, it's just the market going through its typical buy and sell programs, and they can't really have to. I feel it's not in the best interest of retail to know that the market just goes through buy and sell programs, right? And the news when it comes to the stock market, it's kind of irrelevant of what we're trying to do in the market, right? If we want it to go down and the market wants to go down, it's going to go down, irrelevant of the news, right? And the news will follow. But for an individual stock to go up, it could very well be news related in the sense that, yes, stock has good earnings, stock goes up, right? But, to drive and now news can be one thing, like obviously the sentiment of the news isn't good, right? So obviously less people are optimistic. So like those that do read the news and then go, oh, Trump's tariffs, it's bad, I'm not going to be in the market. Like they are right. Like that's a reason why the market's going down. But the only reason they're talking negative on the tariffs right now is because there's a negative result happening in the market, right? If the market were blowing up, hundreds of dollars per share, at that point, would the news be Trump tariffs are good for the market? Or would it be CPI is not bad or GDP is good for the market, right? So that's just all it is, right? So the sentiment right now is bad. That's because we're in a selling program. And right now, the news matrix is using Trump as the negative news catalyst along with their tariffs, right? So that's the narrative in the market right now. When the market goes into its next buy signal, the narrative will probably change
We don't know what that's going to be right now. It could be whatever economic catalyst is that we have coming up. Who knows? It could be a new advancement in AI. Who knows, right? Whatever they want it to be, it will be. Right? It's just a system. Right? It's a system, right? The market goes into buy signals, positive news follows, right? Market goes up. If the VIX starts to break out, we then pull the market back like we did today. If that then breaks down the S&P 500 like it did, you see big sell-offs. Big sell-offs, big decrease on the market, right? Big decrease on the market, Trump's fault. Tariffs bad, okay? Market goes down for a couple days. Couple days later, the market goes into a buy signal. Market goes into a buy signal's legit, market will increase in share price. Market puts on gains. Market puts on gains, right? Guess what? News follows. News follows positive. GDP numbers are good, Trump tariffs aren't as bad, whatever the case may be. Market goes up. Okay, cool. So market goes up, market goes up, market goes up. Unless the VIX breaks out to pull the market back or the market breaks down on its own, market will go up or stay up. News won't be bad. If VIX breaks out, we pull market back, break market down, gains erased, market goes down, news is bearish, and news follows. Trump's fault again, probably, right? Or inflation's too hot. Or countries are moving away from the dollar. Or maybe we get the yen carry trades back narrative. Global warming is killing us all again. It can be a numerous. You have no idea what's coming down the pipeline to a degree, right? The GDP number ones, those are easy to predict, right? Because you just already know, right? If you have GDP and big economic data numbers coming out, right? And the market's in a buy signal or whatever, and the market goes up, you just already know the news will probably be like, oh, GDP numbers come out, surprise Wall Street, market goes up. Like, that one's super easy. It's like the Trump tweeting or like another president or, you know, prime minister saying something or China talking negatively about the United States, right? Those are the things that you cannot predict, right? The economic number ones, those are easy, right? Because we know that every month numbers are going to come out, every week numbers are going to come out, and we know the news organizations are going to have to report on such things. So if the market is performing positive or negative during those announcements, we already know what news releases are going to say and what they're going to look like. That one's just a no-brainer, right? It's just you can't predict Trump tweeting something or Trump waking up one day and be like, 100% tariffs, right? That one's a kind of a, well, we didn't see that one coming, right? Yeah, pretty much. You're absolutely right there. It's the TA that predicts the news in a way. Absolutely. Because obviously, you know, like it's right. It's like if price is discovered, right? Price discovery, right? If price discovers prices lower, prices go down. You know, some girl or guy over at the Wall Street Journal is like, oh my gosh, the market went down huge today. Donald Trump talked about tariffs today. Must be tariffs. It must be the tariffs. The tariffs are what ruined the world. Yes, everyone. It was the tariffs. Okay. The market is not looking too spicy
today, folks. Everyone is absolutely panicked. Oh, actually, how's DIVO doing? So my DIVO is doing okay here, folks. You're new, still trying to grasp your method, VWAP method, and how to set it up in settings. Yeah, I mean it's one method, right? That's one method, but once you do it, you'll get a pretty good grasp for kind of how markets move all the time. Yeah, it's pretty simple. I could do it here in a sec if you want, but yeah. So then again, you have so DIVO, guys. DIVO. This is an ETF that I bought because I expected that in 2026 we were going to have lower performance for the stock market. That was my assumption. I don't know if it's going to play out. So far, we're into the second, almost third month of the year, right? Arguably coming into the second half of the first quarter. And the market has, I think the market's red for the year, actually. Let's see. I think it is. Yep. Right? Yeah. We opened here in February, December, January. Well, hold on. Maybe not. I have to double check. Let's see. Total year-to-date return about 1%. Right, because January opened up here. Or this is DIVO. I'm like, wait. I'm like, this doesn't make sense, dude. Yeah, so this is saying I don't know if I even trust that. That's crazy. $1.1%, give or take, with dividends. But anyways, long story short, DIVO is an ETF that basically looks to create income through dividends and call selling. So assuming that the market would have negative or lower performance, this would do it's going to do better than the market, obviously, if it's selling calls on different stocks and things like that. And if you have lower performance in the market, most stocks will have lower performance, selling calls, generates income, blah, 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 blah. So far it's worked. We'll see if it continues, blah, 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 blah. No big deal. So just going on to say that so far our thought process for 2026 is that we were going to have lower performance and maybe even a correction to potentially start up a bear market. So far that is working or happening. H Electric. 1 second, guys. All right, where are we? What was I doing? Yeah, we're back. Yep, so that's that. That being said, though, I really have never, I don't think, let me just see, what's the daily? Yeah, and look at the, holy smokes, I don't think I've ever seen such divergence on a daily chart. Holy Mikeys. I actually just looked this for the first time. I mean, that might be the biggest daily divergence I've ever seen in my life. Look at that, leading into 2026. I mean, that thing is just rolling down, and your market's like, we're just going to go up. Like, are you sure? But then again, I mean, your longer term time frames, the weekly, no divergence, actually momentum. But we should also, I'm actually curious, I want to look at the relative strength index on this. Yeah, definitely. Well, debatable, but kind of. I mean, yeah, you can argue there's divergence on the weekly chart, but I was gonna say that I don't think I've really ever seen a big rollover without at least a divergence on democracy. So anyways, something to think about. So that being said, I'm already kind of positioned on some of my long-term portfolios for more of a bearish 2026 and maybe some bearish years ahead. I have no idea if I'm going to be right. It's not like full tilt bearish. It's just like more like insurance. So I'm kind of like, so I basically have insured my downside for my long-term portfolios right now. The best case, literally probably the best case for my portfolio is if the market doesn't drop a whole lot, drop some and just trade sideways. But it's probably not going to happen that way. Yeah, well, divergence is momentum, so it basically means that there was. So if I bring up this daily chart, this is momentum. That momentum is decreasing as the markets go up. So without more gas in the gas tank, eventually that will stop happening. And so it's really not it's not a matter of if. I mean, the markets are definitely having some diverging momentum there on the daily. The degree of the drop is obviously always something we don't know for sure. But this is actually from this is hold on. No, never mind. So using some Chat GPT here, let's see. It's actually funny because it says that the low of day or the low for the year on the SPY is $69. So if you guys remember, that's that ghost wick or that's that algorithm wick print that went all the way to 69. So that's just the fact that it transacted this year at 69 is insane. I hate to say it, like, is that the signal of a Great Depression? That would be just absolutely terrible. Sitting here in 2026. And I'll probably end up digging this video out when we're in a Great Depression and coming back and saying, Kai, remember that time you looked at it and said it was $69? And like, please don't be the signal of the Great Depression here. And then it was. That would suck. Anyways, long story short, you can't see that the market transacted to $69 anymore, but somehow ChatGPT has the information, so that's kind of interesting. So yeah, if the market does a 50% retrace of the algorithm candle, the algo, then we should see the market down somewhere to like, I don't even know. Well, I guess I do know because I can just redo it real quick. Hold on. It's somewhere below that low, I think. So it would be from basically there to, oh, that's SPX. Well, it'll just be 690 then. So I'll just go to 6. Well, I guess everyone wants to know it on the SPY because less people look at SPX. And yeah. Gotcha. So
basically right about the high. Doesn't have to be perfect. 6969. Takashi 69. Mother trucker. Damn. That would be wild. Literally a golden pocket retrace of the algorithm candle. That's what our market's going to end up. That's what that's going to end up basically looking like. Great Depression of 2026. Oh no. No one saw it coming. The world, we don't know. It was Donald Trump and his I'm just kidding. But that would be insane. I just don't know why it was priced all the way down to $69 though. That just seems so unrealistic. I don't know what the hell that's, unless it was truly a mistake. But I don't. You know what I mean? Is there anyone in here that knows what I'm talking about? Like at least one person in here that knows what we're talking about. Anyone? No one. No one knows the algo candle we're talking about. Nada, zippity doodah, zippity deedah. Ba-da-ba-ba-ba, Bitcoin's going down. Oh no. Ba-da-ba-ba-ba, the market's not going up. Ba-da-ba-ba-ba, everyone's like, what the heck? Do-do-do-do-do-do. Thanks, Crypto P. At least someone there. Someone's got it. So, yeah, man, I don't know. If we see it, well, I mean, I do know. I think that's going to happen. I really do. You know, I do. And the likelihood that, you know, that's the other thing, too, is like the likelihood that there's a lot of people on the internet discussing that and talking that, it's probably not many, so that's good, right? But yeah, man, $383 on the SPY. Won't that be something? The dollar cost averaging portfolio is going to get absolutely decimated. But that's the point. That's the point of the case study. Dollar cost averaging works when things are going up. So, Golo. Oh, nice, yeah. Yep, 6901 bottom. You know, and that's the thing is, like, I really do, because I am somewhat superstitious, if you will. And ironically, a lot of my superstitions in my life have actually kind of led me in the right direction, ironically. So, I don't know, it's kind of a superstition I have, that the market wants that. And, you know, it's funny to me because the market goes down to 69. It was 6901, which it's interesting. It is interesting. It's just funny they picked 69. 69 to me is like a joke, right? And then also it's like, unless you watch the market every single day, which there's a lot of people that do, but as far as the general public and the mass population, I would say, I mean, honestly, friggin' ChatGPT probably has the answer. Let's, just for fun, I'll say it now, but it's like, honestly, probably only a few percent of the global population watch the market enough, closely enough, and on enough platforms in general to have seen that, right? So we already know, and now it's been removed from the stock charts, right? So we already know most of the public and pretty much most of the entire world has zero clue that ever happened. right? So unless they had someone document it like me or someone like me on the internet to tell someone and, whatever, there's only so many people that have seen that. So, that's another thing. That information is now hidden, right? It's been hidden from the public. And so, you know what I mean? It's kind of one of those things where the superstition is that unless you're someone who actively watches the market every single day, you would have never saw it. And I'd like to believe that the market. I'd like to believe that sometimes the market, it is nice. And it does give you warning signals. And the market isn't so evil that it doesn't give you a chance. So I do believe that what we saw about a month back now, that is a signal to the people that watch, that put in the hours, right? Not the person that never watches the market, not the people that just kind of give it a thought here and there, but the people who actively watch the market every single day and put in grinding hours that arguably deserve a little helping hand every once in a while. We're just given the helping hand, which says, watch out, be prepared, by giving us an algorithm print all the way down to $69 on the SPY. Not to say that it's going to $69, but to say, why in the hell was there a transaction in a print in the year of 2026 all the way down to $69 on the S&P 500 when it was trading all the way at 7,000? Only people that know that are the ones that sit in front of the computer all day like me and you, maybe. And to me, my superstitions are that is the, hey, little guy, hey, person who puts in the hours, be careful. We just told you that prices have transacted down to there. And if you know the laws of Fibonacci and how energy and how the universe works, you know that energy must be transferred or balanced in that sense, right? So now, with the market transacting all the way down to $69, in theory and in reality, there is now a big candle on the chart that the price went all the way down to here. And that now there is untested Fibonacci and untested price in energy all the way down, really as low as there. But more specifically, the golden pocket and the golden ratio here. Now, no one is ever going to see the candle because the candle does not exist on your stock charts. The candle only existed on your stock chart for like a day, and now it's gone from public view forever. So, I do believe we've been given a signal this year in 2026 that is going to lead to a stock market crash. And the reason I say it with some degree of confidence is because whether or not I'm right or wrong, it doesn't even matter in the sense that the market's going to be here regardless of whether it's right or wrong. I'm just looking at information and data that's been presented to me and using that. This is the same data, close to the same data and the same signaling that we got back in the year of 2022, I think. Is that it? Yeah, so back in the year of 2022, we got something similar. We had a big algorithm candle, like we're talking about now, go all the way down to the price of like 274 or something like that. Or wait, 364? I think it was 364. So back in the year of 2022, we got something similar. Now, the market wasn't trading at the all-time highs. The market was trading, I don't know, like $450 or something like that. It's trading about $450, right? And then we got an algorithm candle that shot all the way down to 364. So we're kind of like, we think where the market's going to go to 364 because that's possible, right? It's not like it was all the way down at 69. It was just a big algo candle down to 364. So that's what helped us basically pre-predict that there was going to be a market crash in 2022 and nearly call the exact price and bottom at which it went to.
by following that algorithm candle. Now, past performance is not indicative of future performance. Therefore, when we use the bottom of the algorithm candle in 2022, which basically said market would go to 364, if we use that same thought process now, that would be us saying the market's going to go to 69. Don't think that's going to happen. But what would be definitely more likely to happen is maybe a 0.75 retrace, a 0.618, a 0.5, 38.2, somewhere into the golden ratios, etc. That I'd be more accepting of. But bottom line, the last time we were given the signal, and I've only seen two over the past 11 years, 12 years or whatever now, I've only seen two of those. And the first one basically did end up happening, and then within 1 year the stock market crashed. Okay. This one happened in 2026. It is huge. I mean, it is the bottom of that candle basically suggests absolute straight depression, like beyond depression, like depression to the second power, if that were to happen. All right. A golden pocket retracement is going to be like 2008 and worse all over again, right? If these things were to actually happen, right? So the same signaling relatively that we got last year in 2022 basically happened again here in 2026. The differences are in 2022, the algorithm candle happened during the live trading hours, which is even more rare. Okay, which is far more rare. Far more rare than what we saw in 2026. This year, the algorithm candle that we saw happened during the pre-market trading session, I think, or the after hours, one of the two. But bottom line, it's like we never tend to see them as often during live trading hours. They usually happen during the overnight sessions here in the United States. So anyways, 2022, it happened right into the early morning hours of the trading session. Here in 2026, it's happened in some of the after-hour sessions. But nonetheless, an algorithm candle to that magnitude is nothing short of ridiculous, crazy, kind of scary, and I'm not going to be one willing to disregard. Yeah, 7,000 on the SPX, quite, never mind, not even gonna, nope, we're not gonna go into that. But 7,000, quite interesting. And then the fact that the number says 69 on the downside, that's another interesting number. 6-9, yin yang, universe. That's interesting. Also, it's funny that they picked 69, kind of like a joke. You know what I mean? So it's all very quite interesting, if you ask me. The market is looking a little bit sketchy. What? Good size. Oh boy. Well, thanks for hanging out with the brother today, guys. Again, like I really don't have. I mean, I could basically hop off stream and start going and painting and doing all that, but what's the point of doing that? It's not as much fun. Interesting. Do 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 do.
noticed I hadn't updated our little ticker scroll thing. It says market's on long side as long as it's over SMA. Well, I flipped the SMA a long time ago, and I had not changed that, so kind of look like an idiot. That's all right. Anyways, so markets again just kind of rolling back down to 1 minute trend levels, and yeah, so I mean, markets are still bearish, not a whole lot to say. Volatility index is still positive. That's going to be a big level there on the weekly. Might even be where we're trying to take the market, to be honest. Well, I do believe that's probably a good spot to call it for the day. It's been fun. It's been real. I think we've done a great job at analyzing markets. Well, I think we do a great job of that pretty much every single day. So that's really never going to be of confusion, I don't think. But anyways, yeah, nice little daily bounce there. Then some resistance, etc. So yeah, we'll just keep watching the market downside until the VIX breaks down, or until something changes. So, anyways, that being said, you guys have a good one. As long as everything goes okay, I should be streaming like every day of this week. Next week I'll be out of town, won't be streaming next week. And then I'll be back in town for a few days, and then out of town, then back to town, then out of town. So pretty much almost the entire month of March, I'm pretty much out of town, is the way it seems. So month of March is going to be very sporadic, but then as we get back into the summer, obviously I'm not traveling as much, so we'll be pretty consistent leading into the summer. And yeah, anyways, you guys have a great one. I'll catch you later, and cheers.